Very good morning, Divya. How are you?
I'm good. How are
I
you?
hope I'm visible.
No, you're not visible. Your video is not visible. Which I think she just dropped out. Good morning, Jose, Dhan, Victor, Dipesh, Aparicio.
Good morning, Divya.
How are you doing, Victor?
Good
morning.
Morning. So, how do you say I am fine in your language? See, for example, I'm Gujarati. Okay. So, in my language, we say majama. For I'm good. So, how do you say it in your language?
My language is Portuguese, and
Huh.
it said, tudo bem. How are you? Tudo bem. I'm asking you, how are you? It's tudo bem.
Nice. Interesting.
Yeah.
I probably not remember, but I certainly I can remember one phrase. I'll not spell it
Which
correctly.
Which
Nice.
one is?
Yeah. What about others? Phyllis, you, Mr. Tan, how do you say I'm good in your language?
Estou bem.
Okay.
Estou bem.
Yeah, Phyllis, you go ahead.
Hi.
Hi. So my question is, I asked you how are you, right? But if you have to answer in your native language, I'm good. How would you say?
Estou bem.
Hurry.
It's the same language as me, Aparicio. We're speaking same language.
Which language is it, Aparicio?
It's
That you
Portuguese.
Okay, okay. Both of you are Portuguese. That's fine.
Yeah,
Yes.
Portuguese.
Portuguese people are punctual. We can say that. Looking
Sorry?
at individuals are punctual. You are on time, so we can say that Portuguese people are punctual.
Okay. We are pontual in Portuguese.
Punctual.
Yeah.
Punctual.
On
Thank you.
time.
Yes. Yes. Jose, Tan, would like to know about your language aspect. How do you say? Mr. Tan, your video is now visible. Yes, yes. So, sir, how do you say I am good? It's still mute, but
I am good.
not in English, in your native.
Native. Fine. Fine. That means đi có mà để.
Okay.
Đi có mà để.
God, okay.
Fine. That is fine.
That is fine. That is fine. Great. Great.
Yeah.
Noah, how are you? Reply in your native, not English.
Come again?
Noah, how are you? Reply in your native language, not English.
Estou bem.
So, okay. We are
Estou bem.
learning one word from different languages today.
Okay. Is Portuguese.
It is Portuguese. Oh, we
Yes,
have
yes.
so many Portuguese. Yeah.
Okay.
We are three speaking Portuguese here. Me, Aparicio, and Noah.
And Noah. Great. Thank you, Dr.
Nice.
Siva. I have already taken some of your time, but it is interesting to connect with all of them and know, different language. So I have learned 3 words of Portuguese today. And Mr. Tan, which is your language?
Yes, I am from Myanmar. Yes, Burmese.
Sorry, can you repeat?
Yes, my country is Myanmar. Language is
Okay,
Burmese.
okay. Wow, nice.
Yes,
So
I am Burma national. So many ethnics in my country. Some are Kachin, Kayin, Kayam, Rakhine, Shan, Burma. I am Burma, so my language is Burmese. Burmese. Okay.
Okay.
Or how about your language?
In my language, we say Majama. I'm Gujarati by origin, and we say Majama.
Majama.
Yeah. Short.
Majama.
Yeah.
Oh, so are you in Hindi?
In Hindi, Badia.
Oh, so many languages in your country, right?
Yeah. We have, every state has so many languages, not just one, multiple languages.
Oh, you are one of the so many languages.
Diverse. Yeah.
Okay, thank you.
Thank you. Dr.
Yes,
Seema.
I'm interested in your different languages, and because I am Buddhist, you are also, most of you are also Buddhist. So I interested the origins of the Buddhist place in India. Okay.
You should definitely come to India then.
Okay, but yes, I want to, before I am living, before why I am living, I want to visit and go around the India, because India is India, Nepal, and the other Afghan origins of Buddhists.
Yeah, you
So I
can
want-
visit Nepal too. then.
Yeah.
Okay, thank you, ma'am.
Nepal, yeah. Nepal is India, Nepal, bye.
Yeah.
This is what you say. How do you say I'm fine in Nepal?
As you know, that the multiple language, but in national language,
Yeah.
Thik chu. Thik chu.
Chu. Oh, it's
Yeah.
similar to Hindi, Gujarati.
Yeah. No, the lipi is the same, no? That like the ka,
It's
kha,
similar.
is the same, no? That's why. Devanagari is a similar Thik chu, but my mother tongue is again different. That the affected for your that's Bihar, UP.
Oh, wow. So you might understand most of what.
Yeah. I understand that your Bhojpuri and then Uttarakhand language and then also the Bihar language, all those things.
So if she comes to India, people will not actually be able to distinguish her. It's not Indian. Okay, thank you. I've taken enough of your time. Over to you, Dr. Seema. Am I audible, Dr. Seema?
Yeah, you are audible. I think
Her
screen is stopped now. I don't know.
Yeah. Okay, she's rejoining. But it's nice to, know, not just languages, but, culture.
Yeah, culture wise, that the other languages, it is very similar, that's
Yes.
one of the previous colleague when I started my career in one of the manufacturing organization. There's a Gujarati Ben. He always just call me that Ben, Mamta Ben, like this. I'm forgetting his name. Very nice guy. Very famous name. You know that in Gujarat, that name is. I heard so many person has a similar name. For something something like this is I am just forgetting. Still, I'm connected to him somewhere sometime.
Your name is very common in our country.
Yeah.
So
Yeah, she's here now.
yeah, Dr. Seema, please carry on. I think.
Yeah, Chalini. Well, very good morning to each one of you. And I welcome to all the participants in the second, the second day of my event. So let's go ahead with let me recap or let me appraise what we have done in the last class, and that we talk about what is the cash flow statement and how the financial statement analysis is being undertaken through the cash flow statement. And then we talk about something more related to some of the aspects, maybe the data, other aspects, maybe the inventory, maybe some of the key aspects which determine the position of the company or the financial strength of the company. On the basis of that, the problem can be identified, Divya, I hope you're here with us. Divya, am I audible to you?
It's not proper, ma'am. I think it's upside down.
Okay, no problem. Actually, the problem, if I need a time, I'm just moving out from the Zoom meeting somewhere. So this is one of the file which I would like to share with the participants, and let's go ahead with the later part of our journey. So in case any question from the yesterday meeting or any of the issue you want to discuss, and I hope you have some of the clarification related to the cash flow statement or the usefulness of the cash flow statement. Yes, I require your input, so I'll begin the session for the next day. Yes, guys, what do you think about, what you have, what was your intake of the yesterday session? Yeah, anyone? Am I audible?
Yes, ma'am, you're
Am I
audible.
audible? In case
Yeah.
yes, please confirm. Okay. So let's go ahead with this session. So here we are talking about capital budgeting decisions. So far now it is set for the finance, where accounting ends, your finance begins. So means we are talking here in this session hardcore finance. We are talking about hardcore money. So how you invest and how you get the output, how you analyze, what are the different techniques which are involved in analyzing your decisions, and so many other aspects which we will discuss during this session, right? So let's go ahead quickly. So here when we say capital budgeting decision, I believe slides are very well visible to each one of you.
Mm. No,
Yeah.
no, it is not.
My
appearing.
slides are visible?
No,
It's not?
no.
Okay, let me check again. Okay, I'll stop share, then I'll share again. Just wait for a minute. Let me confirm now. Is it?
Not it.
Slides are visible? Take a minute. I hope it will be. Visible? Yes or no? The slides are visible, guys?
I think Dr. Seema lost her connection again, right?
Today I'm facing issue. Network issue is a problem I'm facing even still today. And some of the I have accessed, and I'm just what I can do in case you can help me. I will share my slides with you, and you can in turn share. So
Yeah.
I hope it is visible in case visible.
It is at present not visible, but you can share the slides with me. I'll help you out. Okay.
It's visible now. Just look at.
No.
Otherwise, I'll
You'll have to reshare your screen. Then only it will be visible. You lost your connection. You'll have to reshare. Otherwise, it won't be visible.
I'll share with you. That's not a problem. So you need to be with me throughout the session. So that was the only request of mine.
No issue. I'll be there. Just share.
See, it is visible in case. So at least you can take a breath. I can carry on the things.
Yeah, but it is still not visible to anyone.
Not visible? Still not visible?
Not visible.
Okay, no problem. No problem. We'll interact through, okay, fine. Divya, I'm sharing with you. and you kindly share on behalf of me, but various things I have to, let them understood through my system only. So that's the thing, because, my interactive way of learning is to make them understand what I'm, through the slides, each and everything is not possible.
Dr. Seema, you can do two
Okay,
things.
so what I'm going to,
Yeah, go ahead.
visible?
It's not visible actually.
Anyway, I've already,
You try to rejoin, maybe then it works. Another thing, you can join us through LAN because it is better network. So internet would be smoother. Third thing, you can share the PPT
Okay,
with me
I
unless
just-
and until it is visible from your end.
okay, fine, Divya, I'm sharing with you.
I think now it is going to be visible. It is showing screen sharing option.
In case, yes, would have been good for, all of us. Otherwise, I am sharing, just a minute.
Okay.
I've already shared, so you can share on behalf of me.
It's not actually yet visible.
Okay, you give me 2 minutes. Let me arrange the LAN. So with the LAN, I believe taking session would be more comfortable. So
Okay.
you carry on. Let me arrange something. Okay.
Okay.
Just wait for 2 minutes. I'll be joining very shortly.
Okay. Sure.
Okay.
It is visible now, Dr. Seema.
Okay. Very good. In case yes, so we can go ahead with the things together. Okay, guys, I hope you are with me. Let's be connected and we'll carry forward the things. Now, we are talking about the long-term investment decision. Now, in capital budgeting, we talk about the investment decision, how the investment decisions are fruitful, what we need to go with, what is required for this thing, what is the investment proposals are. These all aspects we will take care in time of the capital budgeting decisions, means the long-term investment decisions. So this would be the brief flow of today. So we'll understand what is capital budgeting, what data, what is relevant cash flows, how the evaluation techniques are, what are, and we'll go with the questions in this way. So now go ahead with some of the, what is investment decision is. It is what it is said, it's, what is the objective? I've just used the one statement before going with the assess, that means financial management, where financial accounting or accounting ends, your financial management begins. So what does it mean? The objective of accounting, any type of that, whether it is cost accounting, financial accounting, management, whatever the end number of accounting are, the objective of them is to maximize the profits. Whereas the objective of the financial management to maximize the wealth of the shareholders. Why it is so? Who these shareholders are? Are they real owners of the company or not? Yes, please give me the input of yours. Who these shareholders are? Are they the real owners of the company, or the debenture holders are the owner of the company? The free shareholders are the owner of the company. Who are the real owner of the company? Yes, please. Can I have your input? The equity shareholders who, in case you're running your own venture, so the company belongs to whom? You. So the real owner of the company is the equity shareholder. So what is the objective of the financial management is to maximize the wealth of the equity shareholders. This is what the objective of the financial management is. So when we say the objective is to maximize the wealth of the shareholder, how we can enhance the wealth means their money, how can that profit goes to them, how we enhance with the money which we are giving to them, maybe in terms of dividend, maybe in terms of market value, what we need to do to maximize the wealth growth or the cash, or we understood so far what we are talking about the cash. And so we understood what is the net profit also. So to understand the profits of the shareholders. So how we can enhance the profits of the shareholders. There is two things which we are taking into consideration. So here what I'll do, I'll just show you I'll just go ahead with some of the things so that you understood by that what is required with this. When we implement diseases, yeah, is it visible, guys? Still visible? It's visible?
Yeah, it's visible.
Okay. So when I talk about investment decision, so investment decisions pertains to whom? To enhance the wealth of the shareholders. Now just look at, I mean, investment decisions are of two types. One, in case you want to grow the profits of your organization, what you are supposed to do? In case you want to grow the profits of your organization, what are you supposed to do? Please, I need your inputs. We have discussed some of the aspects yesterday itself. Yeah, Nora. How we can increase the profits of the organization? Yes, Mohammed, Mamta. Anyone? We can increase the profit of the organization. First is, sales is your, revenue which you are generating. So by reducing the cost, you can enhance the revenue of your organization. Yes or no? Guys, yes or no?
Yeah.
Right? So by enhancing the profits of the organization means, just a minute. Now, I will use some of the pens so that you can understand with this. Now, when we say profits of the organization, the investment decisions, let's work out. I say investment decisions. Investment decision, when I say it is to enhance the organization. So what I can do is buy through my original means existing assets or my existing profits which I have, how I increase my existing profit by reducing the cost. In case the cost is reduced, I can enhance my profits. Is it or not? Yes. Second one is to go for the diversification or to go for the new investment decisions. Yes. By going with the new investment decision, I can also enhance the profits of my organization or the bottom line of my organization. But the point is, which one is under your control? Whether taking care to the cost is more controllable or analyzing the new investment decision is more controllable? Yes, please. Which is under your control? You can take care high control of your cost, or you need, this is the new investment proposals are really easy for you to have a control. Yeah, please, with your existing company, you can have more cost control. Means you can save your cost, you can see where the cost is going high. You can control on them, you can save from your past experience where the cost is running high, so you can reduce the cost and can control the cost savings for this and go to the bottom line. Yes, when we say new investment decisions, right? Because it is a new product line, here the revenue, to estimate the revenue as well as to estimate the cost is not a cup of tea. It's difficult. You can only estimate it, right? So this is a bit difficult compared to your cost decisions. Means with your existing investment, you can better see to control the cost and you can increase the bottom line. What it said, it is better from the past production and the cost data because you can estimate better. Now let's move ahead. Now, when we say, now these are the two proposals we have seen. First is by the existing proposal, I can reduce cost. For cost reduction, I can go with, control the cost, or I can go with some replacement decision. What are the replacement decisions? We'll see in the future flow. Now, whenever we go for the new investment proposal, ITC has enhanced their revenue by diversification, by choosing the new product line, and they have gone with the diversification and they have increased the bottom line of their profits or their net profits. They have enhanced their profits through diversification. Now, there when we say that whatever is the diversification is or investment in the new proposals, there are two patterns which we see in general. First is, suppose I have invested $5,000. What I have invested? I have invested $5,000, right? Or $50,000 I have invested. And I'm getting series of cash inflow. This is what my outflow is. What is cash outflow? And what is cash inflow? Cash outflow means whatever you have invested. Whatever is moving out from your pocket is the cash outflow. Means moving out is the cash outflow. Whatever comes in your pocket is called cash inflow. So what is cash inflow? Suppose over the years, you are getting 10,000 or say 15,000 you are getting for 1 to 5 years. So 15 means 75,000 in total you have won, but each and every year you're getting same amount. Second case could be cash inflow which you are getting, maybe first year you're getting 10,000, second year getting 20,000, third year you're getting 30,000, right? Fourth year you're getting 40,000, and 5 years suppose it is total is. In total, you're getting, how much you're getting? You're getting different amount. More than the investment which you have gone with. You have gone with the investment of 50,000. But in the first case, you're getting same amount. But in the second case, you are getting different amount over the years. Are you with me, guys? When we get the same amount, it is called conventional cash flow. Means initial outflow is 50,000, but you are getting series of cash inflow, that same cash inflow you are getting. This is called conventional cash flow. Whereas on the contrary, non-conventional, where when you invested 50,000, but you are getting different amount over the years. Any question? I hope conventional is here. When you're getting different amount, it is non-conventional. When you're getting same amount, it is called conventional cash inflow. Right? Now let's move to the next. How we estimate cash flow streams. Now let's move to the next slide. So when we go with the investment in new capital projects, when we go with the new capital projects, which is categorized into three aspects. So one is belonging to the single cash proposal, means only one proposal you have to invest in. So you want to see whether this investment proposal is justified for me or not. In future, it is giving me adequate return or not. Second one is replacement. Replacement is what? Means replacement, what says you're replacing something, means with the existing machine, with the existing equipment which you are using, you want to add on some new innovative machine, new innovative plan. So you want to do the cost analysis, you want to do the financial analysis to understand whether the investment which I am giving, investing in new machine is justified or not. saying is, in case of new, are you with me? Am I audible? Okay, screen.
Yes.
Are you able to, see the screen also?
No,
Okay,
ma'am,
but-
no.
But the internet is not good.
Screen
Now
gone.
it's okay.
Kindly confirm in case it is. Is it visible?
Yeah, now it's
Yeah, now it's okay.
Okay, maybe there is some network issue. Really, yeah, I'm participant. I'm really, my apologies. And please accept my apologies. Reason being, there is some network issue which are running behind. So somehow we need to adjust. I can't
Sorry,
help out.
là sao khơi ta?
So,
Ông đã thấy nào?
okay, guys, shall we move on? Shall we move on? Yeah. So the third part is mutually exclusive proposals. What the mutually exclusive proposals are? Suppose we have three proposals. First proposal, second proposal, third proposal, fourth proposal we have. Suppose four proposals are running. We four proposals before us. So we need to accept only one out of four. Accept one, reject all is called mutually exclusive proposal. So which one I'll accept, which will generate me the highest revenue, which will generate me the highest bottom line. So that I will accept. So about what I said, three types of proposal we are discussing. First is single proposal. Single proposal means the only one proposal you have. So you want to see the validity of that proposal, whether the proposal is worthwhile to go with, whether the proposal is really good to go with, it is generating enough cash to me or not. Second one is the replacement, which you compare old with the new one, whether the new machine is giving me the balance more than the old machine or not. In case not, I have to check up. I have to go for the financial analysis. The third one I'm talking about is mutually exclusive. Mutually exclusive is when we are landed with number of proposals before us and we need to pick one only. We'll pick one on the basis of their profitability, on the basis of their existing wealth which they are going to. Now, how to evaluate? That is a point of concern to us. Now, let's go with the single proposal, how we analyze the single proposal through that, right? I have already given you the idea. What is the idea which we have discussed so far is cash outflow. We analyze the proposal on the basis of two things. First is cash outflow and cash inflow, right? What is cash outflow? Cash outflow, which moves out from my pocket, is the cash outflow, right? In case for the single or independent proposal, investment proposal you are talking, what would be the cash outflow? The cash outflow would have been, you are purchasing the new machinery. In case you are going to purchase a new machinery, installation is required. So the installation cost is also moving out from your pocket. Then you need some land, you need some building where you can install, so additional cost. Maybe in case you're going for the rental basis, so rental you need to give it. So that is our one-time security you are going to provide. So that is the cost which is moving out. Or in case you're going to purchase or you're purchasing a machinery or a building. Jose, can you please mute yourself? Okay. So in case the second one is land and building. So in case you are purchasing land and building, so that part is also, moving out, or the money is moving out. Then third is, or the fourth is, you need to train the people, you need to train the employees of yours. So that is also cost. So all these costs, four costs, before the machine going to operational or before any of the new machine going to functional, going to be operational, before that, whatever be the cost, whatever be the amount of money is moving out from my pocket is the cash outflow. The fifth one which we need to have, I hope you're with me, guys. Cash outflow is a point of concern because, right. So what is cash outflow? Which is moving out from my pocket is cash outflow. Maybe in terms of purchase of new machine, installation, you are hiring building, purchasing building, that is also training to the employees. That is also whatever be the cost you are incurred or the money you have incurred before the machine going for the operational to installation or before it is coming for the operational, whatever cost is that part of cash flow. Fifth one is working capital you need for this machine. Working capital means over the years to run this machine, you need some working capital. So that is working capital, you know that current assets minus current liability. So whatever be the additional working capital you need, that is also an outflow of yours over the years. Now, second part is CFAT. What is cash inflow? When I say cash inflow, so how the cash inflow means the here cash inflow, we means in the finance, we do not only talk about net profit here. When we add back depreciation amount with this, because depreciation we understood in the last class, it's a non-cash expense. Means in the name of the depreciation, the money is not moving out from my pocket. It is still available in the company. So when I add back depreciation with the net profit, it becomes my CFAT. Are you with me, guys? So we will use this terminology throughout the session. Earning after tax means profit after tax. Or it is the net profit, one and same thing. Either you call earning after tax, you call EAT, you call net profit, you got PAT, all the same terminology. Profit after tax, EAT, net profit, one and same thing. So throughout the session, we will use this terminology CFAT. Now we are talking about hardcore finance. So the hardcore finance says actual money which is landing in my pocket is this. Any question? Any question, guys? In case any question, please discuss. Okay,
Professor.
now let's move ahead. Yeah,
Professor,
please.
just a
Yes,
question.
Mohammed.
Cash inflow after tax means that additional tax, we add tax with cash inflow equal projected earning after. I don't understand this equation. Can you please?
See, Mohammed, what we are saying is this is not additional tax actually. Whatever be the earnings you are making, suppose the earnings which you are working somewhere, so you're getting salary, right?
Yes.
And in the salary, out of the salary, there are many of the expenses like PF is being cut. In case you have taken some loan from the organization, that loan is also being, that's called the gross salary, which is being given by the organization. When I say net salary is many of the things, many of the like loan you have taken from your organization, that part of installment is being cut, right? Then you have taken some PF amount deduction is also there. That part is also cut. So what you are getting, am I audible? Am I audible properly?
Yes, yes.
Little bit.
Yeah, it's all good.
To all the participants, my voice is audible. Completely audible?
The sound is disconnected sometimes and it's clear. No problem, no problem.
Okay. Okay, I'm just coming to respond to your question, Mohammed. What we're saying when we, whatever be the gross salary is, so whatever is deduction is going out of this, maybe in terms of PF, maybe in terms of, in case you are taking some loan from your organization to monthly basis, they're reducing the installment. Suppose 10 lakh is your salary. You are getting 10 million, right? The gross salary of yours per month basis, right? So out of this, suppose say 0.5 is my PF deduction. Say 2 million is my monthly loan which I have taken from my organization. So monthly basis or yearly basis they are deducting out of this. So what getting actually the net is I'm getting 0.5 and 2.5 I have deducted. So I'm getting 7.5. This is my Extremely sorry. So what I'm getting, Mohabbat, is when we say net profit is after tax. And out of this, we need to pay tax also. This is what the net profit we are talking about.
Dr. Seema, we
Any
lost
question?
your
Any Mohammed?
screen. We lost your screen sharing, PPT.
Sorry, Divya.
You'll have to reshare the PPT. We are not able to see it.
Okay.
No problem, Professor.
Just
The
look at
sound is
again.
scattered. I don't hear you. No problem. No problem. I'll review these equations. So no problem.
You're not able to hear me?
Yes.
Just a minute. Let me then work out with the.
Now I believe we can have some more meaningful discussion, and there's some network issue. So because of that, the intention was somehow it was as not up to the mark, I believe. So now what we are talking about the cash outflow and cash inflow. So far we understood cash outflow means which is moving out from my pocket. Say I want to invest in okay. So in case I want to invest in any of the proposal or any of the investment project, I request to mute the participants in case they are not with us.
There is no external noise here.
Okay.
Dr.
Fine.
Seema.
So now let's go ahead. So what we are talking about is cash outflow is which is moving out from my pocket. Maybe I'm purchasing any plant, I'm installing cost I'm bearing, additional other buying, building, or any other cost, training to my manpower. So whatever is moving out from my pocket is the cash outflow. And what is landed in me, what is landed in my pocket is my cash inflow. So far I understood this aspect, isn't it? Right. So this is what cash inflow is, cash outflow is. We understood that aspect so far. Now let's move ahead. So the next one which we are interested in knowing, suppose in a single proposal we are investing. So what would have been our cash outflow? What would have been our cash inflow? These are the things which we are going ahead to understand that too. Now, I believe my slides are very well visible to each one of you. Yeah.
Yes, ma'am.
Okay. So now the cash outflow, when we are saying someone is snoring also in between the session.
Yeah, I am also hearing the same thing. I was going to.
Who this lucky person is, let me
My-
let me point out. Anyway, so
Sleeping.
yeah, that's the reason I want to see who this lucky person is. So anyway, I believe
It's
Mohammed.
1 o'clock.
Okay, Mohammed.
Professor, it's 1 o'clock in Peru.
Okay, so anyway, let's go ahead. So what we are saying is we have already seen so far. So suppose in case we are going with a single proposal, right? In the single proposal, we so far understood installation is a plant of machine, working capital, whatever be the cost is. Now cash inflow, what we are getting? Cash inflow is the money which is landing in my pocket over the years for that proposal, because you know that any of the project which you are investing, it will not yield you profit immediately. It takes time. In the first year, you get some profit, but not substantial. Second year, more than that. Third year, you establish in the market. So accordingly, you generate the revenues. So I want to see whether my cash inflows are more than my cash outflows or not. And here, we want to see the time value of money, because we understood that too also. The value of money reduces over the years. So 10 lakh or 10 million in case I'm getting right now, first year, or 10 million I'm getting 5 years after, which has the more value? Right now, in case you have 10 million, or 5 years after, in case you receive 10 million, who has the more value? Which money has a more value? Means the purchasing power, I'm saying. Right now?
Repeat the question, Professor.
Yeah, that is the question.
Which is the question?
My question is, in case you receive 10 million today, And the second one is, in case you receive 10 million after say 5 years or 10 years. So which one
Today.
has the high value today? Why? Because you can
Today.
why it is so? Today has a high value. Why it is so? Because you purchase more
Inflation.
quantity. Their inflation is one of the factor. Economic policies are one of the factor which reduces due to the inflation. The value of money reduces over the year. So I want to determine the real value. How I determine? Let's look at. So now over the years, what I will do, this is the investment which I've incurred in the beginning of the first year, which is called 0 year, right? Which we have invested, suppose first, second, third, 5 years, we are having the gestation period of the project. So what I will get sales from this project, then operating costs, whatever be the cost, I have given salary, I've given rent, I've given, advertisement, and so many expenses I have incurred over the years. So I will reduce that. So what is left with me? The inflow means profit before tax is left with me. So whatever be the expenses I have incurred, then the depreciation I have to reduce, and the EBT is before the tax. Whatever I'm getting is this. Somewhere this lucky person I want to see at my own.
It's from Jose, I think. I don't know.
Okay, I don't think so. The host is before me. Because I'm presently with my host only. So anyway, so I want to somehow mute in case Divya, you can help me. Because this is distracting somehow, with the participant attention and somehow mine also. So let me see if possible from my end. No, I can't mute. I believe Sebastian, are you here with us? Sebastian, are you here with us?
Yes, I'm listening.
Okay, and Jose, are you here? Anyway, okay, let's carry on. Somewhere the snoring is, compromised. Anyway, let's go ahead. So what I'm talking about is, let me put to the screen. So here we are talking. So the cash outflow means money out. Now over the years, what I'm getting the sales revenue, which I've generated over the years. Then whatever is cost moving out is now EBT we are getting. You understand EBTs means whatever be the total sales you have received, cost you have reduced, any type of the cost. So whatever is left with you is before tax is EBT. Then you have reduced tax also, you are getting EAT is the net profit. And I have already made you understood CFAT when we say cash inflow. When we say cash inflow is when you add back the depreciation. So this is the money which you are receiving, CFAT you are receiving over the years. I hope my participants are with me. You understood the CFAT concept? First year CFAT, second year CFAT, third year, fourth year, and so on. And the last year, which is called terminal year, when the project will end, you will receive some salvage value because you have purchased and you have invested a lot of money in purchasing your plant, your equipment. So at least some of the value, scrap value, your project will give me, or this plant will give me. I suppose I've invested 5 lakhs rupees, 50 millions I've invested, or say 5 million I've invested in purchasing the plant. So that plant will give me at least 50,000. So that is what the scrap value, at least the scrap value, right? And the recovery of working capital is that how? Let's go ahead. So this is what I will receive. Now let's explain it with some of the example. Okay, so this is what. Okay, now replacement when I say I compare with one with the other, right? So this is what replacement is. First understand the concept, then we'll go with the questions also, complete questions with this. Okay, replacement, when we say replacement means new and the old. We compare the analysis of new with the old. In case I want to purchase new machine, I want to compare whether the revenue which I'm driving from the new machine and the revenue which I'm driving from the old machine. In case new machine is giving me the high revenue compared to the old one, I will go with. In case not, vice versa, I will think over. Right. So what I'm saying, the cost of the new machine plus installation cost, working capital, these are the costs which will be the part of new machine. So in case if I want to go with the sale of the old machine, so this I will get. So net investment of mine is my new machine cost minus the value which I got from the old machine is the sale of the proceed, which I'll get with the old machine. Then format 4 is says how the replacement is, talking about how we go ahead with that. Let's work out with the small example now. And the mutually exclusive investment proposal I've already discussed with you how we are going. Let me see which this is the same slide we have shared, because it is not showing me the example. I have come out with the, okay, I will share again. Give me a minute to share again. Just a minute. Give me a minute, please.
Are you
Yeah.
Mohammed?
Yeah, I'm very well with you. I'm very well with you. I'm connected.
Fine,
Don't
Victor.
worry.
Fine.
Yeah,
How are
I'm
you?
connected.
Good.
Just a minute. Okay, guys, let us continue with the same, which I've shared with the Divya also. So let's go work with. I'll share the same one. Okay. So now I hope it is visible to each one of you. Is it visible, guys? Yes. Please confirm in case yes. Now let's work out all
it's
these.
visible.
Now let's work out all these things which we have talked with a simple example. Right. So let's work out with this example. We are saying a plastic company is considering two mutually exclusive investment proposals. Mutually exclusive means 1 out of 2 we have to accept. In case there are 10 proposals, only 1 we will accept, rest other we will reject. What does it mean to mutually exclusive proposals are? Right? 1 we will accept, reject others. Now, what is the 2 projects are? X requires the purchase of new machinery. In case you are going to purchase X machinery, you need to go for the investment of 15 lakhs. Sorry, 16
Sorry
lakhs.
to interrupt Dr. Seema, but
Yeah.
Jose, we are trying to mute you since long.
Ups and
I'm
down,
so.
no, it's ups and down.
But
I
I
don't
think,
know.
yeah,
Yeah,
Sometimes,
somehow it is getting unmuted.
yeah, again,
yeah, just look at Divya, who this participant is. Somehow it is distracting the attention of mine also.
Sure. And no worries, everyone. I'll try to manage.
Okay, kindly go ahead. Right. So
thank you,
what
Divya.
yeah. So let's go ahead.
He's tired, Professor. He's tired about the concerning the explanation. It's a hard course, financial hard course.
Possibly, yes. Okay, anyway, let's go ahead. We need to accommodate all the issues, challenges. So this is
Yeah.
one of the challenge to cope
Yeah.
up, right? So let's go ahead. So what I'm saying, in case I'm investing or purchasing X machine, my cost is what? 16 lakhs, right? Or my operating cost, one-time cost I have to give is 16 lakhs. And over the years, what I have to give? I have to give 1 lakh each year. This is what my operating cost is, right? In case I go with proposal Y, my initial investment will be 10 lakhs. and yearly operating cost will be 2,20,000. Life of both the machine is 8 years, and there is no salvage, means no scrap value. They said there is no scrap value. At the end of the life of the project, you're not going to get anything. So the depreciation which you are going ahead is the straight line method. What is straight line method? Means whatever is the cost of the machine, say cost of the machine is 16 lakhs, divide by 8. 8 years is the period. So each and every year you need to depreciate, means write off in your books of account 2 lakhs every year. Are you with me, guys? Anyone who has any issue? In case of second machine, what will be the depreciation? Can anyone help me? What will be the depreciation? In case of the second machine, 10 lakh is the cost. Again, divide by 8. What is the depreciation? What is the amount of depreciation? Yeah. Divide this and give me the answer quickly. The answer is 1.25. This will be the depreciation. In case of first machine, I'm going to write off 2 lakh every year. In case of second machine, I'm going to write off 1.25 every year. Right? That's what the straight line method suggests. Now, what they say? Now, tax rate is they have given is 35%. Now we have to see, since out of 2, which one we should go with. So what they're saying, determine the relevant cash outflow and cash inflow after tax. This is the question which is given to us. Now let's move on. Right? So just a minute, let me remove all this. Anyway, okay, fine. Let's go ahead, bear with this. What we are saying in case of machine X, let's see. We can move ahead apart from that also. Right. So what we are saying, machine X is, we need to outflow is 16 lakhs. Right? 16 lakh is the price which we are investing in X machine, and 10 lakh is the price which we are investing in Y machine. So what is more outflow? In case I want to buy X machine, I need to share with 6 lakhs more. Right? And what is the cost which I need to bear? In case of machine Y, I'm going ahead with 2,20,000. In case of machine X, I'm going to ahead with 1 lakh. So 1,20,000 is the operating cost which I will save in case I go with machine X. Are you with me, guys? Anyone? Any issue? In case any issue, I will move on. I will tell you in more simplistic term. I hope it is clear. How we are saying, suppose we say we have 2 machines. The first one is machine X and the second one is machine Y. So machine X and machine Y, when I say how to proceed with, this is the point of concern. Now, let's look at machine X and machine Y. I will form like this. So machine X, you are investing 16. Machine Y, you are investing 10. Now the cost, operating cost for machine X Y is 2.2. For machine X, it is 1. Now the depreciation which we are going to bear with machine X is 2, which we have already calculated, and 1.25 in case of machine Y. So far, are you with me, guys? Anyone running with any problem? Let me know. I hope you are with me so far. Yes? Yes or no? Yeah? Any question? Any question? Any query? In case you are running, please let me know. So what is the cost which we have? The total cost besides this, this is the purchase cost. So in case of machine X, I'm going to give, I have to give 6 more. In case of cost is concerned, in case of X machine, I will go with 3. In case of machine Y, I will go for 3.45. Right? So how much I need to share more? 0.5 0.45. In case I want to go with machine Y, I need to go with 0.45 more. Are you with me? This is what 45,000 is. Whether you go with incremental basis or you go with the direct calculation, you will get the same amount. Besides this, you need, because 45 is the saving. In case you go with machine X, you are going to save 0.45. So this is what the saving is. This is what the revenue which you get. So you need to pay tax also. 0.35 is the tax. How much is? 15,750 is the tax which you are going to pay. So how much you will save in case you go with machine X? You are going to save 29,250. Are you with me, guys? You're going to save 29,250. Yeah? Yes. Any question? So because of the CFAT, you need to add back the depreciation. And the depreciation is how much? This is the depreciation, which we have seen, incremental depreciation. Are you with me, guys? Any question, guys? Any question? Any question in case? So when I add back the depreciation, so over the years, I'm getting this much of the revenue, incremental inflow, which I'm getting over the years is this. So do you think my outflow is this? My inflow is this? Is it the prudent decision to take this machine or machine X is advisable to go with? Yes, please. Is it really we need to go with, machine X or machine Y? Yes, house. I hope you're with me. I need your response. Yes, Mohammed. Any question? Yes, Mohammed, please. You have raised your hand. Please raise your query. Please move on.
Professor, please.
Yeah.
Can you repeat the explanation? I don't understand this.
See, what I'm
things.
trying to say, see, we need to see the explanation which we are going ahead. We have two machines, machine X and machine Y. Divya, kindly look into. Divya, kindly look into, please. Okay, now the two machines we are talking, machine X and machine Y. For machine, in case I am going to buy machine X, I have to share 6 lakhs. Yes, Mohammed? In case I'm going to buy machine X, I need to share 6 lakhs more, right?
Yeah.
Now, the cost which I'm going to bear, I have shown you the explanation also. Now, the cost which I'm going to bear with machine X, I need to pay 1 lakh. For machine Y, I need to pay 2,20,000. So in case I go with machine X, I need to pay how much? Sorry, in case I go with machine Y, I need to pay 1,20,000 more. Are you with me?
Yes.
Okay. Now, when I say depreciation, this is when I go with machine Y. Then I need to pay this one 1,20,000 more.
Professor, how you calculate this depreciation?
How I calculate the depreciation? Depreciation is very simple because this is straight line method. Straight line method says whatever be the cost of the machine, in the first case it is 16, in the second case it is 10, right?
Yes.
Divide the useful life of the machine. The useful life which we have seen is 8 years,
8. Yes.
right? So what we are going to do, divide 16, I'm sorry, just a minute, divide 16 with 8. So I'm getting 2, right? Divide 16 with 8, you're getting 2 lakhs. Similarly, divide 10 by 8, I'm getting 1.2 lakhs, 1.25 lakhs. Are you with me?
Yes.
Right. So this is how we get the depreciation amount. So now the concern is whether I should go with or not. Yes, now I need your answer. Kindly give me your answer. What should I do? Whether I should go with or still need to think. Yes, guys. Yeah. Because since 6 lakh is the amount which is moving out from my pocket, and the amount which I'm getting is, here we have seen 1 lakh something I'm getting, right? So 15,000 we have deducted and add back 75,000. So this is the amount which I'm going to get, right? So let me go for the screen mode in case feasible. Yeah. So earning after tax, we need to add back with 25,000, 75,000 more. So this is the profit which I get over the years. Anyone who has any issue can raise your issue. Whether it is advisable to go with. My question is, my outlay is this. This is my earning after tax. But I know that in case I want CFAT, I need to add back the depreciation. So in case I add back the depreciation, how much amount I will have? Add 75,000 with this. Are you with me, guys? Anyone who is not with me? Anyone who is not with me? Right? So whether my question to the house is whether I should go with or not. One time I'm getting this. So add back 75,000 with this. So if in case I add 75,000 with this, I'm getting this, how much? 1,04,250. So whether I should go with this proposal or not? Quickly. Outlay 6 lakh and which I'm getting is 1,04,000 over the years. So whether I should go with or not? Quickly, guys. 1 year investment in case it is. Of course not. My outlay is more than my inflow. I should not. Are you understanding what I'm trying to say? In a simple way also I have.
Yeah, I have
calculated.
one. May I?
Yeah.
May I?
Absolutely.
You just in cash inflows after taxes for machine Y, you just deducted the cash operating cost of why I'm not getting this portion. You know that 2,20,000 you just deducted 1 lakh and you are getting the 1,20,000. I'm not getting why you are doing like this one.
Okay.
Sorry.
See, the other way round of this is, I will come with your point, right? What I'm saying is, just a minute, please. Okay. See, what we can do, please write down with your own words. Why, this touch screen is not working at present. I don't know why. Okay, I'll try in case any of the pen is working. That would have been good to me. I can explain you. Okay, now it's working. So what I'm saying, say 2 machines we are talking, machine X and machine Y. Now go within this way. Machine X, the operating cost is 2.2. Sorry, 1 lakh is the machine cost is, what I'm going to get is 1 lakh, right? I need to give 1 lakh for this. Whereas for machine Y, I need to pay 2.2 lakh as an operating cost each and every year.
Yeah.
Yes, right. So how much more cost in case of machine Y over X I'm paying? 1.2.
1.2, yeah.
Are you with me? So this is what 1.2 is. Now move to the next. Now depreciation also, we understood the concept of depreciation. For machine X, my depreciation is 2 lakh. In case of machine Y, my depreciation is 1.25. Yes?
Yes.
Are you with me, guys?
Yeah.
Yes.
So the total cost is 3.45 I need to pay in case of machine Y. In case of machine X, I need to pay 3. Yes? Any questions so far?
Yes,
I hope
yes.
so far you are with me. Yeah.
It's,
So
it's
in
cash inflow, this 3 and 3.5.
These are the cash inflows. Mean these are the costs, not a cash inflow. These are the cash, which are moving out from my pocket, right? Is this. So for machine Y, in case I go with machine Y, I need to pay 0.45 more compared to machine X. Yes?
Yes.
Are you with me all?
Yes.
Mamta, are you with me? Okay. So in case I go with machine X, I can say 0.45 in other way around.
Yeah, 0.45.
Okay, so this is what this is says. In case I go with machine X, my cost saving is 45,000. I hope makes sense.
Yeah.
Shall we proceed
Wow.
now?
Why
In-
45?
45 means 0.45 lakhs is 45,000. We are talking in terms of point here. So 0.45 lakhs means 45,000.
1,000, yeah.
Yeah, Mohammed? Yes or no? Means multiply
No.
this with 1 lakh. So you will get 45 lakh. 45,000, sorry. Yeah? Anyone
Why
who is not
45?
40, this is 3.
How we get?
Okay, fine. So this is what 2 lakh instead of 2.2, make it 2 lakh, 2,20,000. Instead of 1, you go for 1. I have picked the first digit. Huh? I've gone with the
Mohammed,
first digit. Right.
I think it's a matter of currency, but I think
Yeah.
1,000,
Okay,
right?
you talk about million. Okay, yeah, you talk about million, or you talk about in maybe in million or billion. You talk about whatever be that, right? So now what I'm talking is the million is when you add 1 0 about it, so then it becomes right. So what I'm saying, suppose you are getting 2,20,000 and 1 lakh. Suppose. So what is the excess? Which you are you're giving by using machine Y is 1.2, or you can save with machine X is 1.2. Right? Or
Yes,
1,20,000. So this is how
yes.
you have converted 45,000. Multiply this 0.45 with 1 lakh, you will get 45,000. I hope makes sense. Yes. Yes. In case I go with machine X, I can save 45,000. That would be my saving. So cost saving is 45,000 or 0.45 lakhs. One and same thing. You call it 0.45 lakhs or you call it 45,000, one and same thing. Okay. So now, whatever be my saving is, whatever be my income is, I need to pay tax. What is the tax? 35% is the tax. So 35% of 45,000 is 15,750. So this I also need to pay on the income which I have generated. So what is the actual earning? This is 29,250. In case I go with machine X, I will have the profit of 29,250. Are you with me, guys? Yes? Make sense?
Okay.
Anyone who is not? Yes, Mamta? Others? Any confusion in case you have? And what we want? We don't want net profit. We want CFAT. For CFAT, what we need to back? We need to add back the depreciation. So what is the depreciation? 75,000 is the incremental depreciation. So I add back this. So total amount which I'll get, this is my savings in case I go with machine X. My saving per year will be 1,04,250. Yes, Mamta and others? Any question in case you have, please raise. Please don't allow me to move unless the things are clear to you. Yeah.
Professor.
Yeah. Yes, Mohammed.
Agree.
Yeah.
I understand just at the stage 3 and 3.45. After I don't understand.
3.45, you don't understand. Okay.
No, I understand
No.
this, but 45,000.
Okay.
This cost
This
saving
is
before taxes. And
okay. No problem. I'll just come up with your explanation. What I'm saying, this is what 1 lakh. X machine is 1 lakh. Now put
yes.
it in this way, right? 5 digit, right? And
Yes,
this is
yes,
what
yes.
2,20,000. So this is instead of this, I have dot in point 1.0. So in case I multiply this with 1 lakh, right? 1 with 5 zeros. So I will get, when you multiply 0.45, 0.45 is my saving, right? We understood?
Yeah, yes. Ah, okay.
When
Okay,
0.45 multiply with 1 lakh, it becomes 45,000.
okay.
Are you with me? Okay.
Yes, yes.
Right. So you understand CFAT also 1,04,250, how we get? Everyone is on the same page? Yes or no? We have to buck up ourselves. I need to explain you so many other things also. because because of internet and so many issues, my time is wasted. And in case I request to Divya, I allow me to have 15 minutes more, so I could carry forward that too also. Anyway, let's go ahead. 1,04,250 is clear.
Yes, yes, yes.
Right. So now over the period of 8 years, because life of my project is 8 years, we have seen. Yes. This is first year I will get, second year also I will get the same amount, third year also I will get the same amount, my operating cost is same, my tax is same, my depreciation is same, whatever the information they have given to me, each and every year I will get 1,04,250 in my pocket. So for 8 years, how much I will get? Multiply it. At least I will get more than 8 lakhs. Close to 9 lakh I will get from this project. You can multiply it, you can see also, right? So this project is profitable to me. So I will go with Machine X. Machine X is costly, but I am going to save each and every year 1,04,250. That would have been my income because I'm saving with this. So in case I save with this over the 8 years, so the amount would have been close to, multiply it, 0, 0, 0, you multiply it, you will get the, what I'm talking about. Give me the answer, precise answer. Multiply it, give me the answer quickly. Yeah. Anyone? Mohammed, do me a favor. Calculate. Yeah. Yes, please. What is the precise answer I can give you, but I want calculation from your end. Yes, Mamta, what is the precise answer? Other participants? Sebastian? In case you can help me, Sebastian? Those small calculation I'm requiring from you. Yes?
Yeah, it's in the chat. 834,000.
How much total?
834,000.
8.
Yes.
That's the total calculation is how much? This is 8,34,000. Absolutely correct.
8 lakhs.
So total is 8,34,000 I'm getting in my pocket. And how much I've invested? 6 lakhs. So I'm getting the profit of 2 lakh. My excess cash inflows which are landing in my pocket and my bank account is 2,34,000. So whether I should go with this proposal or not? Yes or no?
Yes, yes.
Yes. So which machine is better? Y machine is better or X
X.
machine is better? Of course, yes, X. Right. So how we calculate? This is what in case of mutually exclusive proposal. Now, so far we have not included time value of money, but first understanding I want to build how to calculate the cash inflows and cash outflows and take a decision. Now, my second one is, let's go with the
Professor.
second question. Yeah, please.
Can you go back to the yeah? Okay, it's 8 lakh
Yeah.
30,000, right? But
Yeah.
shouldn't we compare? I mean, the 6 lakhs here or the 600.
Yeah.
Shouldn't we bring the 8 lakhs to net present value to compare with the 600, because the amounts of money are in different times.
Yeah. Okay, let me answer to your query. See, machine we have brought in one time or over the years we are brought in. We will purchase the machine at the beginning of first year or over the 8 years we will keep on purchasing the machine. Yes, Sebastian.
No, we're going to purchase the machine right now.
Very now in the beginning of the year or before going for the commencement of the project. So that time I have to purchase this machine. So one time investment it is, which is 16 lakh in case of first machine, 10 lakh in case of second machine. But over the years, I'm getting the revenue, I'm generating the profits. I'm generating the income. I'm generating the cash. Per year, how much cash I'm generating is 1,04,250. Are you with me?
Yes.
Right?
Yes.
So over the 8 years, how much revenue I will generate, cash inflow I will generate is 8,34,000. Are you with me, Sebastian?
Yes, for sure. But what I'm
Right?
trying to say is that the 1 lakh.
1,04,000 per year. This is
Yeah, I
first
know,
year I'm
but-
getting. Second
Yeah,
year
but
also the same amount. Third year also same amount. Up to 8 years, I'm going to get the same amount. Yes?
Okay. Yes, yes. Yeah,
So
but
total, yeah. Please go on.
yeah, I mean, I understand that the total is 8 lakhs and 34,000.
Absolutely. So how much?
However-
Yeah. Yes, Sebastian.
However, what I'm trying to say is that, okay, in year 1, I have, you know, like what do you say, an inflow of 1,42,000.
250. Yeah. Or you can call it 10 million point 10.42 million. That's
Okay,
or
10 point,
yeah.
it's better, 10.2
Yeah.
million.
Okay.
10.2
So it's not million
and-
because for the million we need to add one more zero along with it,
Okay.
right? So then that becomes million. Or we could say in the
Okay.
point we could say
Yeah.
0.104250 million. This is the profit
Okay.
which we are generating over the years. Per year we are getting this. So 8 years we are going to get total is 0.834 thousand million. Right? This is we are going to get, or in lakhs we are saying, so 8,34,000 we are going to get, right? We have invested 6 lakhs and we
I
are getting
understand that.
8,34,000, right? We are getting this. So
I understand that.
Yeah.
But what
Come
I'm
up.
trying to say is that in year 2, I'm also getting an inflow of 1 million, 1.2.
Yeah, the same inflow I'm going to get over the period of 5 years. Sorry,
Exactly.
8 years. Over a period of 8 years.
Exactly.
So you can
Exactly.
multiply simply instead of adding. So this is the total inflow I'm going to get, and the total inflow is this.
Yeah, but
Yeah?
my question is, should I compare the money that I'm going to get the next year with the money that I'm spending now? That's what
Absolutely. Because see,
bring back the money of period 2 to period 1 with, I don't know, the inflation.
That part I have not addressed so far. I will address, but first you understand this aspect. I will go with the time value of money also. But before that, you should understood this. Then only I will take you sequentially. So you understand the concept completely. So I'm saying in case, I will just go with that also.
Yeah, if you're going to explain that, it's okay. For what you have done right now,
No,
I just don't understand that.
No, I will go with that also. This is not NPV. This is I'm saying without time value of money, how much you are going with, you are going to save 2,34,000. So in case you are going, this money is landing in your pocket, excess money is there, you will go with the project or not? Yes or no?
No.
Yeah. So which machine is better? Machine X is better or machine Y is better?
Right now, X.
X. Okay. Now let's move on to the next one. The second one is also talking the same thing in the way, right? Just a minute. Let me remove some of the aspects which is possible. Okay, fine. So now what I'm saying, the next one is my sales is, I will go with this like this. Now it will move out. So now second question is says my expected revenue in case I want to go ahead with some of the machine, this sales is I'm going to generate this, depreciation is this, decrease in contribution to the existing product is this, and these are my all expenses which I'm going to have. Right? Are you with me, guys? Are you with me? Any question?
Yes.
Right. So can you calculate how much I will be going to get the revenue? I have for you, just look at my sales is 5 lakh, which I've seen 5 lakh minus 2 lakhs because minus this 20,000 because the contribution, selling and administrative expenses, my fixed cost is this. So how much I'm getting? By deducting all, I am getting per year 1,80,000. This is what my earning or this means profit before tax. I need to pay tax because they have already provided tax is 35%. I'll move out, 35% is the tax. So earning after tax per year, I'm getting 1,17,000. But I know my net profit is not my cash inflow. My cash inflow, when I add back the depreciation, it becomes my cash inflow. Are you with me, guys, so far? With the second question also? Yes, CFAT is clear. How to compute CFAT? Each and every participant. Any question? Shall I move on? Any question in case? Okay. Now, cost of debt we will take later. The time is not permitting to us. Now, we are talking about some techniques. We understood this is how we calculate CFAT, how we calculate cash outflow also. CO and CI we understood. Now, there are different techniques to analyze. First is, the first two techniques are called traditional method. And the next three techniques are called modern or time adjusted or discounted cash flow techniques, or where the time value of money is adjusted, right? So let's talk about with the first one, I'm not taking into consideration. Let's go with the payback method because time is a positive. How much time is left with us? With 1:30 we do have, can carry on the session till 1:30. Then I can explain you each and everything in detail. Can we, take our session till 1:30? Divya, I'm just asking to you. In case possible, okay, fine, we'll go with, let's go with ARR, right? How this is what average rate of return. Name says average rate of return method. So how to compute? Let's go back. Suppose we have two proposals, proposal A and proposal B. Both the proposal we have same cost. We have investment cash outflow is same 56,125. And the income which we are getting over the years after tax and all, after depreciation and all, these are the profits which I'm going to get first year, second year, third year, and so on. With machine B, same profit over the years, we are getting same profit. Are you with me, guys? Life of the machine, life of this project, both the project is same.
Yes,
Salvage value or even the scrap value is same, right? So which one I should go with based on ARR? Are you with me? Any question? Now, what is average rate of return? How we compute? Average rate of return is nothing but the average profit. Okay, sorry. Average rate of ARR is nothing, but it is the average profit. I will take the pointer. Then let's go ahead so that I could explain you better. Now, what is this? ARR is when we say it is how we compute that too. Now, this is what, see the next slide. Average rate of return is what? Average income by average investment. So average income is what? What is the income we have? These are the income which we are yielding over the years, isn't it? 335 total is 36,875. When we divide by 5, we will get average income which we are getting per year. So what is the average income we are getting? 7,375. I believe participants are with me. Yes, average income is clear. In both the cases, I'm getting same income. My question is, I'm just going to probe some question. Now, what is my average investment? There is a formula for that. Working capital, salvage value, 1/2 of this. So what I'm getting, my average investment is same. 29th, because my cost which I've incurred for both the machine is same. No change. So I'm getting, based on this ARR formula, I'm getting the return is 24.9%. In both the projects, I'm going to get 24.9%. Now my question to the house, in case it is mutually exclusive proposal, which one I should go with? Whether I should go with the first one, because my ARR is same exactly. My income is same, total income is same. My outflow is same. Which one I should go with? Quickly. Quickly. I need your input now. Which one I should go with? Yes, Mohammed. In case you are investing into proposal, right? These are landing before you. Machine A this, machine B this. Which one you will go with and why? Sebastian. Any other. I'm not particularly saying, but pointing out, right? At least. Just give me the whatever way, whatever is coming in your mind, give me the answer of this. Quickly. Mamta.
I try to understand the example. This is the
Mhm.
data of the example and the calculation, the next slide.
The calculation is 29.25. You can calculate because the formula is lying before you. So the calculation is not a big task. You can very well. Working capital, how we have calculated, I can show you also that too, right? So working capital is 3,000. We have shown, see here, this is the working capital, 3,000. Then we say salvage value. Salvage value is also same in both the cases, right? What is the salvage value? Salvage value is, they have given is, this sorry, solve. Yeah.
Machine.
Yeah, in case both of there's no working capital is 0. They have not given any information. So means it is 0. Salvage value is 3,000. We have given in both the case it is 3,000. So this is the cost of the machine is also same minus salvage value. So the total average cost is running to me is 29,565 in both the case. I divide inflow with outflow. I'm getting same amount. Are you with me, guys? Now the percentage in case of both the machine as per average rate of return is 24.9%. My question is which one I should go with? Whether I should go with both the machines or no? What is your answer? Quickly,
Hello?
quickly. Yeah.
Hello, I think machine it is better than B because ideology of business, we need to increase, we need to improve incrementally, step by step improve in long term. So machine B is 9,000, 7,000, 5,000. That means we have not incremental improvement, incremental profit. Machine is incrementally improve, getting gradually more and more profit we get. Because machine it is better than B, I think so.
Okay, very, very true. Any other? This is what the one explanation we get. Another explanation, anyone?
Okay, Professor, maybe it's related with what I was saying before, that is more valuable the money right now than in the future years. So maybe machine B has
Very true. Absolutely, absolutely. Yeah, yeah, it can be. Yeah.
And
Okay.
with taking in account that the estimated salvage is the same, I think I haven't done the calculation, but I think machine B might be better.
Okay. Any other? Well, money which you receive today is better. Even if time value of money we are not taking into consideration. We are not taking into consideration time value. Still machine B. Why? Because we see, the life of the project is only 5 years. After this, the project is going to wind up. Are you with me, guys? So earlier you receive, better it is. Earlier you receive your money, better it. Future is unpredictable. If machine B is giving me higher return in the initial years, it's good to me. I will at least take back my money. It's landing in my pocket. I'm safe myself. Later the years, higher the risk is. Are you with me? Even time value of money we have not taken into consideration. Still machine B is better. I hope makes sense. Makes sense with the discussion? Yeah, I believe any question in case participants, they can raise, prop up So we could have more meaningful discussion. I believe you are with me. Now let's move to the next one, because I want to take you similarly. Now these two machines are there, machine X and machine Y. Here, this is the investment which you have incurred. Cash outflow is this too, in the working capital, or this, or you're going to get the, net profit after taxes this. And in case of machine B, you're getting this. Life is always, everything is same. I'll show you the calculation. In this case also, if you see my ARR, how we have calculated, you understand my average profit, whatever be the profit I have added and divide by 5. So this is what my profit is, and this is my average. 25% is the thing which I have. So I'll go with which machine? I'll go with machine B. The reason it is giving me, both are giving me same return, total return is same in both the case. But machine B, machine Y is giving me earlier higher benefits. So I'll go with machine Y. I hope makes sense. Then let's move to the second one, which we call payback. What payback says? Name says payback. Whatever you have paid, in how many years you're getting it back. Earlier you get back is good, or later you get back is good? Yeah. Earlier you get back your money is good, or later you get back your money is good? Quickly.
Earlier.
Earlier, very true. So suppose this is a question which is lying before you. I have invested 40,000 in a machine, and it is going to give me CFAT. We understood CFAT so far now. Net profit plus depreciation is CFAT. 8,000 up to 10 years. I mean, every year I'm getting 8,000, 8,000, 8,000. So in how many years I will take back my investment? I divide 40,000 with 8. In 5 years, I will get back my investment. Are you with me, guys? In how many years I will get back? 5 years. Suppose I'm getting the revenue 10,000. Instead of 8, I will get back. I'll get the CFAT is 10,000, maybe for 7 years, right? Or 10,000 for 8 years. Total revenue same. So I will divide by 10. So I will get in 4 years. So which one is better? Whether I will go with A, 8,000 who is giving me a CFAT, or B who is giving me 10,000 CFAT. There I will get my payback is 4 years. Here my payback is 10 years. Are you with me, guys? Which one is better? Quickly give me answer. So I'll move on to the next one.
The first one.
5 years. Later you get is good.
5 years. Yes.
5 years is good. Yeah. Any other and anyone else want to give their submission? Anyone else? Which one is better? I have put in the question before you. Yeah. Which one is better? Yeah. 40,000 divide by 10 is 10,000 means 4 years is coming. In this case, earlier is 5 years. Which one is better? Quickly. So second one. Earlier I get back my money.
Yeah.
4 years
4
is
years,
better,
yeah.
right? Okay. Now move to the next one. Wherever I want to use pen, so that's the reason I need to switch off the system. So because there is some issues which are running around, so I can't use the higher network. So this is the problem. Okay, fine. Now let's move back to the other question. What is this? There are 3 investment proposals aligned, A, B, and C. I need to go with the investment of 10 lakh in each of the proposals. First proposal 10 lakh, second proposal 10 lakhs, third proposal 10 lakh. My investment is 10 lakh, 10 lakh, 10 lakh. What I am going to get with this first proposal, I'm going to get these benefit. With B, I'm going to get these benefit. With C, I'm going to get this benefit, right? Which one I should go with as per payback, right? These are the CFAT which is given to me. I need not calculate. So the calculation is before you. These are the 3 proposal. How much I will go with the cumulative. So 1 lakh in the first year. Add 2 with the 1, it will become 3, right? When I add 3 with 3, so it becomes 6. Are you with me, guys? Now the total I'm going to get, then 10 plus 4, it becomes 6 plus 4 become 10. Then 10 plus 5 become 15. Then 15 plus 2 becomes 17. Total 17 I'm getting. In case of B, I'm going to get total revenue 8 lakh. How I get? 4. This is the first year I'm getting. Then second year I'll get 3 more. So I'll add to 4 with 3. So I'm getting 7 lakh total. Then plus 2, 9, and then so on is this. And C, I'm going to get this one. Now, which one I should go with? In A proposal, I'm going to get in 4 years. 4 years means 10 lakh I'm going to get. Payback says when you will get back your investment back. So what is my investment is 10 lakh. So 10 lakh I'm going to get in as far as A project is concerned in 4 year, in B 4 year, in C 3.5 years, means not before 4 years I'm going to get. So as per payback, which is better? Which one is I should go with? Quickly. Quickly, guys. Which one I should go with? As per payback, 3.5 C I should go with, right? Are you with me, guys? But is it the right decision? As per payback, the third project is good. I should go with third project. But do you think it is a prudent decision to go with third? Yes? No. Why? Because it is not giving me the future interest, going to give me 10 lakh, I'm investing only 10.5. Whereas with project B, I'm going to get maximum revenue compared to A. So B is the best one, right? But payback is not saying this. So this is the limitation of payback. So we need to move beyond this. But payback giving us earlier we get better is. So which project is giving me early? But it is governed with some limitation. This is one of the limitation. Now let's move back to next one, which we are saying is NPV. Right. So now let's move to the discounted techniques, which first one is related to your NPV. Right. So the question which we have discussed during the earlier one, I'm just putting before you. So suppose you have invested X amount, 56,125 you have invested. You know, you recall with the first one which we have gone with. So where we have invested 56,000, say suppose say 50,000 you have invested, right? In both the proposal you have invested 50,000. But A machinery giving me the return this. B machinery is giving me the return this. Are you with me, guys? Any question? The CFAT which I'm going to get with machine A is 14,000, 16, and so on. And with machine B, I'm going to get 22,000, 20,000, and so on. Suppose inflation rate is 10%, means value of the money reduces over the years, right? Value of the money reduces over the years. So I want to see the money which I put in. Suppose I have put in, first case is 50,000, right? First case is 50,000. I said I have invested 50,000. So I want to see the real money which is landing in my pocket. With proposal A, I know 1 rupee value at the end of 1 year, or the purchasing power of 1 rupee will become only 90 paisa at the end of 1 year. So whatever I can purchase within 1 year with the 1 rupee today, I will be able to purchase with the same less quantity, only 0.90 quantity I could purchase. Then value of the money reduces at the end of 2 years is only 1 rupee value reduces to 0.82 paisa. Third year, 0.75 paisa. How I get? This is how I get 1 divided by 1.1 is 0.909. So this is all the calculation which you will do, which is not a point of concern right now. But when we say the inflation is there, so the tables are given to us. On the basis of that, we can calculate. So the value of 14,000 is not actually 14,000, it is 12,726. When I multiply 14,000 with 909, multiply 6,000 is 16,000 with 0.826 you're getting. So the real amount which you're going to get is 69,645. with machine A. And with machine B, it is 71,521. So far, are you with me? Any question? I'll take you to the next. In case not running with any problem. Any question, guys? Any question? I hope this PV factor is clear. Anyone? Any question?
PV factor, Professor, is the inflation ratio.
Yeah, this is inflation, means the purchasing power of money, you yourself admit, the purchasing power of the money reduces over the year, right? Higher the inflation, lower will be the value. Are you with me? When I say developed country, 0.10. I will just show you the calculation also. I will show you the calculation, how you, yeah, how you get this. Now I can use my pen. I need to, as I said, I need to unshare. So, okay, I will use the marker. So we'll go ahead. Now, what I'm saying is how we get it. 1 rupee value over, in case inflation is 10%, means 1.10. When 1 divided by 1.10, it is coming 0.909. You just divide it in case you are carrying calculator with you. At the end of 2 years, because at the end of 1 year, please calculate. It is 1.909, means the purchasing power of 1 rupee is equivalent, means right now, in case you can buy 1 kg of potato in 1 rupee, right? But after 1 year, you will able to buy only 9.909 kgs, means 909 grams you can buy. Instead of 1 kg, you can buy 909 grams at the end of 1 year with 1 rupee. At the end of 2 years, with the 1 rupee, you can buy 1 kg. But at the end of 2 years, you will buy only 0.826 kg, yani 826 grams you can buy in 1 rupee. So over the years, purchasing power of rupee reduces. Are you with me?
In the fifth year,
Yeah.
0.621.
Yeah,
One
the
rupee
rupee value means
divided
how you
by
get
1.5.
Yeah, then later on 6th year 0.5, possibly. How you get? When you divide it. At the end of 2 years, 1.10 raised to power 2. 1.10, 1.1 into 1.1. When divide with 1, you will get 0.826. At the end of 3rd year, when you divide 3 times, you will get this value. So there the PV tables are available, which you can use it for your calculation purpose. Are you with me?
Okay.
Right? Concept is making sense? Any other question? Any other? Okay, now I'll move to the slideshow again, right? So what I'm going to
And the
get
present,
at, yeah.
Professor, present value is the PV factor multiply the CFAT.
Absolutely, it is real value. Means 14,000, which I have now. In case somebody give you 14,000 at this point of time. So you can purchase with 14,000 larger amount of things. Then at the end of 1 year, in case somebody give you 14,000 right now and give you at the end of 1 year, right? So who has a higher purchasing power? How much quantity, whether the same quantity you can purchase now or at the end of 1 year also, same, you can purchase the quantity. Yes, Mohammed?
Yes.
No. Because inflation, the money value of the things increases.
The value of
Actually, if the price of the quantity increases, the potatoes which you are buying now, it's of 10 rupees, maybe 40 rupees per kg. Or maybe in 1 kg, you can buy in $1 or in $10, you can buy 1 kg of potato. Right? In $10, you can buy 1 kg of potato. But at the end of 1 year, with 10 rupees, you can buy only 7.750 gram only. You can't buy 1 kg. Reason, inflation. Reason, purchasing power of money reduces over the years. Are you with me? Yeah. Any question? Mohammed, is it clear? Yeah. So how much it reduces? By this. So actual value of money reduces over the years. So this 14,000 is not same, which I'm receiving now or I'm receiving 1 year after. Actual real value of 14,000 is only 12,726 in case inflation is 10%. Are you with me? 16,000 at the end of 2 years, which you will receive. The real value of 16,000 when you multiply with 0.826 is 13,000. So presently with 13,216, you can buy after 2 years. With 16,000, you can buy that amount or that quantity of material. Value of money reduces over the years. Are you with me? So the total of this is 25 plus 40. In case you go ahead, you will get total is how much? Yeah. Means 88,000. This is total is 88,000. But the real value, this is what absolute you are getting. But actual real value of 88,000 is only 69,645. Right? In case of B, the real value is 71,000. Why it is so? Because early you're getting money higher. So, you know, purchasing power of the rupee reduces over the years. So that is the only reason, though total is same. So which is better to go with as per time value of money? Of course, the second one. Are you with me, guys? Machine A or machine B, who is giving me the higher value? Machine B is giving me the higher value. Suppose I have gone with the investment of 50,000, both are workable. But in case, because I will reduce out of this 69,645, I will deduct 50,000 out of this. In case A, I am saving 19,645. In case of B, I am saving 21,521. Are you with me? Still, you need some explanation. Please let me know. Yeah. Yes, please. Clear? Shall we move on? Okay. Now the next is
Dr.
Net-
Seema,
Yeah.
you can finish this, but after that we need to go for a break.
May I get 10-15 minutes more, Divya?
Then actually the break time is only till 45. It had to start at 15. So if you take 10-15 minutes more, that break would be more than over. So I would
Okay,
request you to
okay.
take 5 more minutes and
Okay,
I
fine. No problem. Suppose this is an example. Please look at this example. I want to clear the concept of NPV, which is very important. Right? And Sebastian is also asked for, and it's really meaningful. So see, there are two proposals are lying with me, machine X and machine Y, and the investment is like this in both the machines, same investment in working capital as well as outlay. I'm going to get the revenue like this, which we have already seen. And this is my economic and salvage value. Now, as per NPV, what I should go and how I should go with. Now, in case of machine X, my revenues are my cash flows. It's not cash flow, only this is a profit which I'm getting, EAT, which I'm going to get, right? So, and my depreciation, since it's said the depreciation is how much? 5 lakh is the cost of the machine, right? And 50,000 I will get at the end of the machine, the terminal value. Just look at the question again. 5 lakh is the cost of the machine. At the terminal, at the end of the project, I will get 50,000 as a scrap value. So actual investment of mine is 4,50,000, right? This is a depreciation rule says. So 4,50,000 I've invested over a period of 5 years. So as per straight line method, you understood 90,000 each year is a part of depreciation, which I could write off my machinery by the amount 90,000. Are you with me, guys? So each and every year I'm going to get 90, 90, 90, 90 to write off in my book of account. So I'm getting EAT. So for CFAT, I need to add back 90,000 with 30,000. So this will, column 3 is my CFAT. I hope makes sense. You are with me. At the end of first year, I'm getting not only 30, I'm getting actually 1,20,000, 1,40,000, 1,60,000, 1,90,000, and 2,15,000. At the end of fifth year, I'm getting scrap value also. And I'm getting, because I'm no more using net working capital, so I will going to get this back also, right? This is the things which I'm going to get back. Okay, now inflation suppose is 13%. So my money going to reduce 1 by 1.13. I've already discussed with you how to calculate. When 1 divided by 1.13, it will give me the value 0.885. Means inflation in case is 13%. My 1 rupee cost at the end of 1 year is only 88 paisa. Higher the inflation, lower the purchasing power, lower the cost is. Okay, so this is like this, 0.54 and say 0.78. This is at the end of 2 year. 0.78 is the value of 1 rupee in case inflation is 13%. Similarly with third year, fourth year, and so on. So what is my real cash flow? Or what is my real income which I'm getting out of this? It's not 1,20,000, 1,40,000. It is this 1,60,000, 1,06,200, and so on. So the total income which I'm going to get is, or total real income which I'm going to get is 6,640,000. And how much I've invested? 5,25,000. So what is my net present value or net profit is, or net savings which I have saved over the years by investing in this project is 75,640. Are you with me, guys? Any question, please raise. In case any.
Professor,
Yeah.
EAT, what does it mean?
What
EAT.
is?
EAT, here is EAT, depreciation, EAT.
EAT is earning after tax. EAT
earning
or
after
net
tax.
profit. It is same, which I've already made you understand. Whether you call it EAT, whether you call it PAT, PAT is profit after tax, or you call it net profit. One and same thing. There are different terminologies being used. Same.
Please, Professor, can you re-explain this example quickly?
Okay. So what I'm saying, this is my net profit, right? Which is already
Yes.
given 3,30,000, 45. But this is not the real cash inflow. Cash inflow is when I add back depreciation, it become my cash inflow. So actual inflow is 1,20,000, 1,40,000, and so on. Are you with me?
Yes.
Yeah. So, but this is not actually I'm getting. My value of money reduces by this percentage, 0.885. 1 rupee cost remains 0.885. So 1,20,000 is not real. Actually, 1,20,000 and multiplied with this, it becomes 1 lakh. So actually, I'm getting not 1,20,000. In really, I'm getting 1,06,200. When you multiply 1,20,000 with 0.885, you will get 1,06,200. Same with the second case, 1,40,000 when multiplied with 0.783, you will get 1,09,620. Similarly, in case of others, all 5, 7 items which are there. So actually, you are getting total. You are getting is 6,640,000. Are you with me? Yes.
Yes.
Okay. And whatever what you have invested, how much is the cash outflow? Cash outflow is 5 lakh plus 25,000 is a working capital. Look at the question. Yes. So this is the investment which you have made. Money comes in your pocket is 6,640,000. Money moves out from your pocket is 5,25,000. So how much you get, how much landed in your pocket, real value of money, which is landed in your pocket is 75,640. Yes. Yes, please. Is it? Clear? 75,640. This is what NPV is. NPV means when you take into consideration time value of money also, real value of money also. Yeah. In case of project X or project Y, sorry, how much you're getting? This is the EAT you're getting. When you add back depreciation, it will become this. CFAT is 2,15,000 and this. And when you discount with these factors, actual money is 2,15,000 is not actual, it's absolute. Real value of 2,15,000 is 1,90,275. Same with others. When you multiply with the discount factor or corresponding discount factor. So how much you're getting actually? 1,16,630 with project Y. Which project you will go with in case they are mutually exclusive projects? Yeah. Which project you will go with? Project X, which is giving me the return 75,640. And project Y, which is giving me the real return 1,16,630. Yeah, which one? Quickly. Yes, quickly, participants. Which one? You want to add in your bank account higher amount, or you're satisfied with the lower amount in your bank, or your bank balance in case added with the lower amount is good, or your bank balance is added with the higher amount, that is good. Yeah.
Higher amount.
Higher. So you will go with project Y. Why? Because it is giving me higher value.
Right.
It is giving me higher worth. It is added my bank balance with the higher amount. So the struggle is for the higher amount, higher profits, higher cash inflows. So I will go with project Y. Are you with me, guys? Any question? So this is NPV. NPV is very important tool. Very, very important. It will give me real worth. It suggests me the real worth. Are you with me? So shall we go to the next one, which is IRR participants? Is it possible to continue with IRR? Because I'm taking your, lunch break or lunch time. In case it is, NPV is prominently used. That part we have already covered. And I will say one more instead of this. PI, profitability index, is nothing like this. It is what we have done in case of NPV, the same in proportion we are talking. There we say cash inflow minus cash outflow. So whatever we get, we say about this is the money worth which is landed in my pocket. Here we talk in proportion, cash inflow by cash outflow. So more than one is good, less than one is not good, right? Inflow should be higher than outflow. In case inflow is higher than outflow, means the value should be more than one. Otherwise, vice versa, or the contrary is, okay? So this is what my total inflow with discounted value is this, which we have already done one question, and 56,125 we have invested. So one first proposal is giving me 1.24. Both are giving me more than one. But which one is better? A or B? Quickly. Which one is better? Yeah. Of course, B, because B is giving me higher value, higher profit, 71,000 with the investment. So that's the relative value, relative figures I'm getting with the payback or with, profitability index method, right? So this is NPV has an edge over the others, right? So in case participants, you are with me or, you due to the paucity of time, we will end our session here itself. In case you're running with any query, please let me know. That part we have already worked out, right? Any query of yours. IRR is the only thing which is left. Otherwise, we have explained all the methods. In case you're interested, I can spare 10 minutes more.
Dr. Seema, we can continue this forward, but post break. Right now,
Okay.
I don't think would be
Okay, no problem. Anyway, thank you
Uh,
so much, guys, for your patience.
I think
I've taken your.
Sebastian has a question. Is it Sebastian? You have a question?
Yeah, please go ahead. Please go ahead.
Dr. Sima, yeah, right. I was paying a lot of attention to your class, and I have a question. For example, right now in my organization, in my company, in my startup, I have
Okay.
I currently hire a photographer to to
Mhm.
take the shots and to publish all the content in my social network.
Okay.
However, I was thinking that one of the people that works with me told me that, hey, you already pay me my salary, I can do it. However, we don't have the equipment. And I was thinking, maybe I can do this analysis, to see if it is better to continue hiring someone with all the equipment to take the shots. to take the
Absolutely.
photo,
Absolutely.
or to buy the equipment, it's an investment, and see if in the period of like year or maybe 2 years the profits are better for me, or maybe a cost or maybe reducing the costs that we have seen as in the previous example. Is that okay? Should that be okay?
Absolutely, you should have an analysis. After this session, you understand the value of replacement decisions. You understand how to handle with the replacement, how important to analyze when you go for. Now these are two things which we are talking. Project one, whether you should hire on the basis of salary. Second one, on the basis of investment which you want to incur in that equipment and all. So you need to go with the analysis of both, and whosoever giving you higher benefits, you should go with that. Right?
Thank you. I'll do the analysis. If maybe I have a question, I'm asking a lot, but can I do the analysis and send it to you so you can give me a feedback?
Yes, why not? You can. I'll give you my email ID also. Just a minute. I will write down my email ID. This is, shall I write here itself or at the last slide of thank you, which will be more comfortable, I believe.
Actually, you can also share it on a chat. So
no chat afterwards is not possible, not here.
No, chat, they can copy and keep it for them. No? That's why I'm saying if you share it on a chat, it will be easier for them.
It's okay. But otherwise also, in case you are interested, you can use my email, which is my official email. You can send me your query on the official email.
Yeah, I'll also share her email ID.
Yeah, I'm just sharing S Gupta, Gupta. I hope S all small, S Gupta 1818 at MET, AMITY.edu. This is what my email ID is, right? S Gupta, Gupta 1818 at amity.edu. Right?
Perfect.
You can send
you.
your query or whatever you want, the explanation to go, and you can send me on this email ID of mine.
Thank you. Thank you so much.
And, right. So nice. And stay connected. And I hope you like this session. I try to, make you understand with some of the aspects which are very important. And I believe I am able to address some of your queries or, some of your doubts. And in the further sessions, and stay connected with me. And I'm really thankful you have accommodated a lot with internet issues. I do have a lot of, other, external issues which we are facing, and you have cooperated like anything. I really appreciate your kind concern, really appreciable. And my apologies because of some of the things I am not able to do justice with the time. So this is one of my, this humble request to you to kindly accommodate all this. Anyway, guys, thank you so much. Stay connected. And in case you have any query and you need some more discussion to work on, we do have even the cost of, we talk about 18%, 15%, 16% discount factor. But how we drive the discount factor, that is very important in finance. Each and everything is important. Right? So this is called cost of capital, how we calculate, because we drive our money from various sources, how we go ahead. So these are the further interaction sources where we could interact with, right? Anyway, thank you so much. Anything which you want to say, you're free to say, please.
Thank you, Dr. Seema. We lack time, but you still covered it.
Divya,
Yes, Mohammed,
Divya.
go ahead.
Okay. Just to thanks Professor, really great course. It's the first time that I follow financial course like this, and it's very interesting, like IT course. Thanks, Professor.
Thank you so much, Mohammed. Thank you so much for your kind words. Thank you.
Perhaps I will ask Divya if she can send the presentation just to summarize.
No issue.
The
I will,
content.
I will, I will share on the chat box. Is it possible to share the presentation on the chat box itself?
I think so. It is possible. However, at the end of every week, I share all the presentations with them.
Okay, fine.
If you want, I'll share
No
it
issue.
with them.
Yeah, kindly share with them. That will be very
Please
useful for
share
them.
your the final one which you have used with me. I'll share it with them.
This is the final one. You can share. It's for the students in case they learn. So I'll be
Yeah.
really thankful, more than thankful to that.
Okay. Thank you. I know you actually tried really hard to patching so that we have an seamless learning. So thanks for all your effort, Dr. Seema.
Thank you, Divya, for your support also. All time you're very supportive and very kind-hearted. Divya is really appreciable. Thank you so much.
Thank you.
Thank you.
Participants, go for a break or you don't need a break. Do you
No, we need
break?
a break. We need a
We
break.
need a break.
Even I need a break. Okay, so it's 40. We take 20 minutes break. That is max we can take. We resume back at 2 o'clock IST. Today we take shorter break.
Okay, thank you so much. Thank you all the participants. Thank you. Please go ahead. I've taken your lunch time also. Thank you.
It's not their lunch. It might be their coffee, breakfast.
Many
Some of them
things.
lunch. Everything different. Yeah.
Yeah,
No
and
issues.
very
It's
patient.
morning here, Divya,
Oh,
Professor.
okay.
It's morning here in Tunisia.
Yeah, so it's breakfast for them.
Breakfast.
Very
Yes.
true.
So here in Mozambique, morning, we are taking breakfast now.
Oh,
Yes,
great.
yes, Victor. Yes. Good morning, Victor. Okay.
Yeah, it's really nice. Nice to
Enjoy.
know. Right. Thank you. Thanks a lot.
Okay, bye-bye.
Arvind, please help with the break slide.
Yeah, good afternoon, everyone.
How are you, Dr. Sandeep?
I'm good, and I've been listening to a very participative audience. Glad to be here and privileged to be here.
That's great. Participants, are we back from a break? Sebastian is there, Mr. Tan, Rafael, Mohammed. Thank you. I know we ended late, but still you all joined. So grateful to you. Felicio, thanks. Dr. Sandeep, I'll not take much time now. We can start with the session.
Yeah. So
But before that, before starting with the session, I would like to briefly introduce you to participants so that they can cherish this journey with you. Okay, so Dr. Sandeep is a graduate in mechanical engineering from a reputed National Institute of Technology, Jaipur. He also has MBA from Birla Institute, and he brings experience of over 30 years in lighting, defense, and automotive industries with expertise in strategic manufacturing plants, planning, plant operations, product development, and planning, project management, quality assurance. His varied exposure in different functions and domain has made him one of the respected trainers and consultants in the industry. I'm sure learning from him would be a great exposure to you all. Dr. Sandeep, please carry forward and let me know if you face any issue.
Okay. So good afternoon and namaskar in India. And I can see that, all of you are coming from different nationalities. And thank you for the introduction, Divya. And briefly, I have spent my 32 years in manufacturing and operations. So here I've been listening to the program flow and the questions and answers that have been shared. One thing which I've seen, and the session which is going to be, now undertaken by me, it is a little, different from the earlier sessions. But there is one thing which can actually establish the connectivity, very solid connectivity, is that in the previous session, Dr. Seema Gupta was talking about cash flow. And she also added that a cash flow, even if it is negative, but it is going into improvement structure, or it is going for the upgradation of the existing infrastructure, or if it is going into the process of product technology. All of that, if that results, the money invested and the cash flow gets negative or adverse, is still not a negative sign for the company. And the reason is because it has been spent and it has been very well invested. So this is the activity which actually differentiates from a good investment and the bad investment. She also talked about the time value of money and capital budgeting. Now, friends, this session, it's something like in a household, we'll have a drawing room, we'll have a living room, we'll have a bedroom. I'm going to now take you to the kitchen, which means that I'm going to take you to the operations part of it, where the money is invested, where the decision for making or making these investments for different projects. It could be in plant, it could be layouts, it could be structure, it could be technology. All of that requires a kind of technical and commercial analysis, which is important for operations people to do. And I bring my own experience of 32 years of industry onto this table, and I will try my best to see that I do justice with this in the short span of time. But I can really see that all of you are very participative and trying to assimilate the subject in a very meaningful way. So I will take you to the manufacturing and operations area, which means that operations could be manufacturing for a production company. It could be a service entity for a service-oriented company. So the operations can actually render a service, and operations can also render you a manufactured product. So here, these are the perspectives that I'm going to bring it to the table, as the earlier sessions have dealt with the basic management, the general management, the leadership, the marketing management, and also the financial management. Now, as I said, we are going to go to the kitchen area of the house, where the operations are actually performed, where man, machine, material methods are interacting with each other to produce a complex, a technically equipped product and a customer in line with customer requirements. So this is the area, or this is the scope of my 1 hour talk. And the topic which has actually become very popular in this operation is lean manufacturing systems. Why? Because a production, we have come a long way. As a production entity, we have come a very long way. 1900, we can actually trace our history even to the 18th century. But I must say that, the modern cars, the automobile industry today signifies a kind of manufacturing excellence which nobody has ever seen before. But it has taken about 122 years for the industry to come to this level. What it really means is that it all started with a basic concept of customizing a product. It is very difficult to believe today that the concept of making two parts identical was also not there. It was always a custom-made product. It was always a craft production. It was not a mass production. And when I say production, friends, please take it as operations. The genesis of the lean manufacturing systems has started from manufacturing, but today, as I can see, as trainer and consultant of lean manufacturing systems, is that it has been applied everywhere. Point here is that when we started, it was only the production. The Taylor's theory, the good old Taylor's theory said that there are certain principles we should focus on worker. We should focus on workforce, and how to make them more and more productive was the name of the game. But as we have traveled through a century, we have come a long way, which means that when we look at the production, it is for a layman's person in an operation which is happening in maybe in the bank or in an insurance company, wherever. When these operations are happening, it looks as if it is something very simple. But the kind of service flow or the material flow or the information flow which is happening there, one should be able to see scientifically there is some kind of logic behind all of this. And if there is a lack of logic, we find that there is a flow, there is an interruption in the flow. So all the production and service and operational activities today are using this system, which is called lean manufacturing systems. Now, I just come back to you with a subject. I'll be treating this subject with a lot of care. But how many of you have heard of this term called lean manufacturing system? Just to start with, it will also help me to customize my inputs, and I will go as slow or as fast as I am given to understand in terms of how much of it is known to us. Lean manufacturing system is a term. How much of it, just show of hands, or you can just unmute yourself and tell me that if you have at least heard of this term. As I can see that you, coming from different nationalities and different operations, there are, Mr. Antonio is coming from telecom industry, and then many of you are coming from government operations, from universities as well. I've also seen Mr. Sebastian coming from a private company, Universidad. There must be some operations happening. Maybe it's a service or it's manufacturing. But when it is a question of applying lean manufacturing principles onto these operations, how many of you have heard of it? Yes, please.
Yes, Professor.
Yes, Mr. Mohammed.
Good morning, Professor. Nice to meet you. Lean method, it's a Japanese production method.
Okay. Japanese lean, what you are saying is lean is a Japanese term for manufacturing system. All right. Anybody else who has heard of lean manufacturing system? I see Mamata Chaudhary is coming from operations and financial specialist. So Mamata would have some.
Yeah, it's if it's talking about the lean manufacturing, as I know that the minimization of the waste with maximization of the productivity, just if the theoretical knowledge only, but I don't know if practically we are going to applying all this not. But whenever I heard or whenever I study in my MBA, that I heard about the lean manufacturing.
You heard about it. Anyone else?
Professor.
Yeah.
It's first applied by Toyota factory.
Well, as I say, the historically, it all started from manufacturing systems as a factory concept. But today I see it is percolating everywhere, even in the banking operations, in the insurance companies, because we will actually understand this concept and appreciate that ultimately it is actually a lean and mean thinking. What I'm saying that you want to make your operations lean and mean in a productive way, mean not in a negative way. So here, because ultimately, as we will see it in the slide presentations also, that initially it was just a question of making your workforce productive. Then it became the material to be such that they are bought at the least cost and the best quality. So the focus was only on material and labor. But as an industry, we have evolved a big way. Now I see that these things on material and labor cost have almost saturated. So then this thought as an industry has evolved that, you know, we need to really go into a next level of thought process where every process will have to be seen. And we have to critically ask ourselves, is the process there which customer pays for? We ask a very simple question in lean manufacturing system, is that if I am finishing this piece and final product, what is the impact of this particular activity of finishing this piece is there or not? The critical question to be asked is whether my customer is paying for it or he's not paying for it. Or if he's not paying for it, it is a non-value adding activity. This kind of critical thinking in the manufacturing, in the operative system is prevalent these days. And the whole idea has been put into a framework called lean manufacturing systems. So with your permission, I'll start with my slide presentation, and you can stop me whenever you want. Divya, I'm sharing this presentation, right? Yes. Can you see my presentation now? Yes or no?
Yes.
Yeah.
Yes.
Yes.
Yeah, you can see it in the full screen mode. So this is lean manufacturing overview and value stream mapping. So I will take first half of my presentation in understanding what is lean, why lean, and what is the approach of lean, what are the principles of lean, and then I'll move on to the operative part of lean manufacturing system, which is value stream mapping. This is the presentation, introduction, lean introduction. There are certain tools that lean employs, and then we'll move on to the value stream mapping. So context setting. In what context are we operating and why lean is so important? Today's business, we have a real business challenge in terms of the customer is always wanting the best of quality. They want all varieties and they want just-in-time deliveries, whether it is service or it is a product or a hardware service. They need shorter lead times and very low price. And you feel very excited about meeting all these requirements of customer, but then there is on the right-hand side, management expectations are don't increase cost. Please don't increase cost. So it looks like a wet blanket. It becomes a big dilemma that if you want to improve your operative performance to deliver what customer is looking for at the cost, there will be some incremental cost. But management is not really looking for any increase or accepting any increase of cost. So look at this equations also. Mathematically, the equation looks same. Price is equal to cost plus profit. And profit is equal to price minus cost. Mathematically, it is the same equation, but philosophically, if we go to the industrial philosophy today, going into the new paradigms, business paradigms that we are operating in, there are distinct difference between these two equations. Can anyone figure that difference out? What exactly is the fundamental difference between the two equations, not mathematically, but philosophically?
Both has cost involved.
But there is a difference between the two equations, Victor. The difference is, earlier when there is no competition and we are producing goods or service, what you do is that you take what you have spent and then you add up as a markup as profit, and that becomes price. The price can be calculated simply by adding your own cost and the profit that you expect from this operation, and you get the price. But in a market, in a competitive market as it stands today, the biggest of business challenge is that price is not what you control. So price can never be on the left-hand side. Price is on the right-hand side. It is a fixed entity. It is a fixed value. A price is something which would be determined not by us, but by the market, but by the customer. And what you spend is in your control, and what you are left with after the price minus cost is your profit. You cannot dictate cost. You cannot dictate profit. I'm sorry. This is the main business paradigm change which has happened. Now in this, I'm just taking you to the environment in which mostly all the businesses are operating except for some monopolistic businesses. And the major problem is that cost is always rising and price is always coming down because customer is looking for lower and lower prices, and the costs of goods and the raw material that you're buying is constantly increasing. So this is the biggest of challenges that any business is facing. Now we can see that, as you see this in the world over, if I see the world, a total world to be a complete business house. Earlier, the scenario was, when I was an engineer of about 30 to 32 years, the scenario was that manufacturing and contract manufacturing and service, which is labor intensive service, used to happen in the Asian part, in the Asian countries, because the labor cost was cheaper. But today, as we can see, the labor cost even in this part of the world is increasing. I've been involved in some of these joint ventures in Korean company Hyundai. They came to India with the purpose of getting a low cost labor. But then they soon discovered that the labor cost even in India is rising. And we calculated very sincerely on the total cost, on total price of the product. We found that a year down the line, the way that the labor cost is rising, it is not going to be viable anymore. So why? Why is the cost high? In that case, the common answers in labor and materials are not valid at all. We need to understand and we need to penetrate deeper into our operations, banking operations, insurance operations, or production operations. Anywhere the principles of lean and mean thinking needs to be applied is what the context of lean manufacturing system is. Three main heads, labor, material, and energy, are the ones which have already saturated. Now we need to understand why is the cost high. So what are the other contributors? Answer is there are excessive waste in the system. And how lean can help? So let's understand the lean. What is lean here? take a view here, end-to-end process. Understand, let's say a banking operation, a inquiry of loan is coming to the bank. Loan inquiry is processed. That is what the meaning of process is starting. And then after the due diligence, the loan is dispersed, process ends. So imagine this is a process of handling an inquiry by the bank. Loan inquiry processing started, loan dispersed. Now, there is a time between raw material received and process starting. There is a time 2 and time 3. Now, please just think independently and let me know what can be the potential time elements. And when I'm saying time elements, there can be time wasters, potential time wasters between our raw material. Now, this raw material means it could be, something like information. Raw material here is in information. Information in terms of a paper, loan inquiry, the credit rating of that customer. All of that becomes the input for the process to start and see that loan is processed. So in this case, what can be the potential time wasters? In time 1, between a material received, that input enabler is received and the process starting. Let's take a look at them. At time 1, it could be the inventory, lot of information, and in case of manufacturing, a lot of goods are piling up. There could be no demand at all, or the information that has come is not reliable, or the product that has been received is not conforming to specifications. Inspection activity. Something which has come from outside needs to be inspected whether it is okay or it's not. Searching time. In case of manufacturing, the search time is rampant. This means the time taken to look for, to start the process, there are certain material, it could be a component, it could be a sub-assembly, or it could be a piece of information to process the loan is looking for. Time 2, again, you can see this, the time 2 between processes starting and process is ending. We have in process, when the operations are happening, there can be issues like inventory, defective, inspection, unnecessary processing. It is what makes the process unviable. Breakdowns. In case if a machine is under breakdown, that will result in a lot of wastages, waiting time, inventory piling up. Time 3. Excellent. So the lean dot, let me just put it in. Okay. Now let's take a different view of lean here. We have different activities of what customer wants, what we do, and what our system says. Now you can see, invariably in any organization, there are issues such as people are actually working as they just follow a system, but that system is operating in a complete isolation with what customer wants. And at times, what happens is the customer is wanting something, but you are not doing it because you're too busy working on your system. In a way, I'll just give you an example. something, a customer is looking for a service, a particular feature of that service, which is not at all is imparted to the overall offerings or overall the service package that is made by the company. Now it takes its own time for the system to capture that complete feature of what customer is looking for. So now, friends, I am just putting this as a one activity called activity number 1 is one activity which is purely value added, which is a pure value added activity where the system is capturing it. You are working on it because customer is wanting it. But then there are certain requirements which are not exactly the combinations of all three, and they result into a waste. And the microscopic analysis under the lean manufacturing system enables the non-value adding activity to go out of the system. The resources. Now let us take a look at this. I think Mr. Mohammed or Mr. Victor said that lean manufacturing system is coming from Japanese terms. Not, he was right partially, because there are certain terms which lean actually employs, and they have been used extensively in Japanese industries. Take a look at this. There are 3 ways, 3 M's. These 3 M's are signifying the different kind of wastages that can possibly happen in the system. Muri is overburdening. You can see this man is carrying too much, which will result into his physical distress. He may fall sick. He may go out of the system for some time, will result into the loss of productivity in eventual terms. The mura is unevenness, the fluctuations, which means, look at this. There are 2 people, one has got 4 pieces, the other one has got 2. Unevenness in the system also leads to wastages in the system. Muda is the waste because 3 people are employed, and it is just a question of carrying 6 pieces. No muri, no mura or muda is this picture. Now, diagrammatically, it looks very simple to evaluate, but when it comes to the operative systems, we need to be very methodical and systematic in finding these inaccuracies. I'm audible now, right, friends? Mamta, Victor, Mohammed, now I'm audible. You can see that.
Yeah, you're audible now.
Yes,
Okay.
yes. Perfect.
Yeah. Lean manufacturing concept takes a look at these wastes in 7 ways. There can be a waste in transportation. There can be a waste because inventory is piling up. There can be some unnecessary motions that are happening in the shop floor or in the operations. You are waiting for material, you are waiting for the decision, you are waiting for some information to come to you so that you can process your information, process your inquiry or a part or a product. Overprocessing something which is not really required or called for. Overproduction means that you need to have 5 pieces, you produce 10 pieces. You make 5 calls, but you actually end up making 10 calls. Defects. Now, this is summed up with one word called Timwood. I think it is interesting to remember these 7 sources of waste in any business enterprise through a word called Timwood. So for me also, it is much easier to remember this with this word called Timwood. Timwood. Transportation, inventory, motion, weight, overprocessing, overproduction, and defect. So lean is an approach to prevent the wastages. It is also called Toyota Production Systems because Toyota was a company which started this concept, and lean manufacturing principles was first employed in the automobile industry. However, as I said, now it is applied everywhere across the board, be it manufacturing or be it service. Construction industries are also in a big way have employed this. They have service operations, they have got construction operations as well. So it is applicable in all types of organization now. The principle of lean is highest quality, lowest cost, shortest lead time. What is the lead time? Anyone knows about what is the meaning of lead time? Can anybody volunteer to tell me what exactly is lead time, please? We do hear of terminology called cycle times, lead times, throughputs, and there are different durations described differently so that we can work on efficiencies, different elements of efficiencies separately. So the lead time is right from the time when the customer has placed an order on you to the time when you are actually delivering that product or service to the customer is the lead time. So if you have given this today and you provide the service or product day after tomorrow, that much 2 days, 48 hours becomes a lead time. Focus of lean is to eliminate waste and non-value adding activities from the entire value stream. Now, first time, friends, I'm using this word called value stream. We will know more about it because this is the whole idea of lean manufacturing system in contrast with other approaches that have been employed in manufacturing systems. You will find when we look at any operations, it is a flow of information or it is a flow of material. Information or material. Now, a service material can be seen as service. So there are only two things, the flow of which is monitored very closely in lean manufacturing systems. And you, at every bit of, imagine the water flowing in a pipe. Water flowing in a pipe, if there is an interruption in terms of a pipe is getting broken, or if there is some protrusion in the pipe, there will be disruption in the flow of water. So imagine that flow of water is nothing but flow of information and material here. And value streams are drawn to see that there is no interruption and there is no wastage. And that is the whole idea of lean manufacturing system. Mind you, we are not focusing on energy. We are not focusing on material. We are not focusing on labor. We are focusing on the entire flow of operations. And this is where the lean manufacturing approach is in sharp contrast to the earlier approaches. And this was needed because there was a saturation in terms of work on productivity, labor productivity. There was a saturation in terms of value engineering to be performed on materials. So it was actually a question of working through a lean and mean approach. And this is how the term called lean manufacturing system was coined. And somebody very rightly said, it has started from manufacturing systems. It has started from manufacturing systems, and the genesis of this system is very interesting. After the World War II, the automobile company, especially the Japan, was completely devastated. But automobile company was coming up in Japan as well. American companies of General Motors, Ford, and Chrysler were ruling the country, ruling the world. But then there were three Japanese companies called Toyota, Nissan, and Isuzu. There are three major companies from Japan. They were also coming up very, very well. So what happened was these companies did not work only on the labor and material. The power of lean was very significantly and meaningfully employed by these companies to challenge the American competition. And this is where the Toyota Production Systems is another name to lean manufacturing systems. We have primary goals of lean. We have different initiatives. You must have heard, some of you might have heard of some initiatives to be taken under manufacturing or service systems or operative systems. 5S. Anyone who has heard of 5S as a term? Anybody who has heard of term called 5S? I have a list of names also. So if I request Mr. Sebastian, have you heard, Mr. Sebastian, the word 5S?
Yes, good morning, Dr. Sandeep. Yeah, I have heard of it. It's a tool used in manufacturing to reduce or better to improve the quality of the products by reducing waste such as transportation, mobilization, and making a more efficient process.
Well, 5S is slightly different, Sebastian. 5S is actually a approach for good housekeeping. Ms. Mamta, have you heard of 5S?
Not exactly, sir. 5S, yeah, not exactly.
Okay, no problems. 5S is actually a technique of housekeeping. In simple words, Japanese words, it is actually come from Japan again. Japanese have a habit of using a buzzword or buzz terms so that it becomes an organizational initiative and becomes a common language in any business enterprise to work on that particular issue. So 5S is just a good structured process of housekeeping. And 5S means 5 steps. 5 steps means you start, there are 5 steps to that. One is, first S is sorting. Sorting means segregation of necessary items from unnecessary items. Second is systematizing. Everything has to be in place and place for everything. And third step is sweeping. Sweeping means cleaning. Normally what happens is when we say housekeeping, we understand sweeping. But technique says that unless you have done sorting and systematizing, there is no meaning of sweeping. So, and then we have standardization and self-discipline. So there, this 5 steps process ensures that housekeeping happens, and housekeeping happens in a permanent way. It should not that some visitor has come to the business, to the office or to the factory, and you clean it, and the day the visitor goes back to his place, the place is back to square one. So 5S is a structured process. So there are many structured processes, many structured technologies or techniques being employed in manufacturing systems. Lean makes use of all these technologies, but in a way which really is objective and purposeful. We will see how. Visual management. I'll just give you one example of visual management. Lean, what Lean wants is that unnecessary activities have to be removed. Now, there can be one unnecessary activity in a business is that people are raising requirement. I am short of stationery. I want some item. Now, I will raise a purchase request, and it will go to the purchase. The process of raising the purchase indent, going to the purchase manager is a non-value adding activity as per Lean, because it says that if it is a generic or a general requirement, it should be visible to people who are responsible for purchase. What it means, imagine kitchen, as I told you, in house. One is that the person who is manning the kitchen, maybe the wife is operating the kitchen, and she tells her husband that I am short of sugar or I am short of tea leaves. And then the husband takes action, goes to the market. One is the kitchen is visual control in the kitchen is so good that the place where the sugar is stored is visible to everybody. And the person who is responsible to go to the market and bring the sugar is able to see by himself that sugar is out and he is supposed to get it from the market. So this is the meaning of Lean principles. In production and manufacturing systems, visual management have been used so effectively that we don't raise formal requests. It becomes clear and visibly clear to the people who are responsible for taking action once the inventory is over themselves through visual controls. So similarly, the different tools, different initiatives are undertaken under Lean. there are common tools in lean manufacturing systems. One very common and popular word called pull system in Kanban. What is the meaning of pull system or a Kanban system? Anyone who can just give me some idea of pull system or Kanban system? I'll just explain this in a very simple term. All the functions, all the processes of any entity, any business, they get initiated after the customer order is placed. They are described as pull system. They are described as the processes operating under pull system. And the processes which are happening even before the customer order has placed are called push system. Which means if you buy material, suppose a guest is arriving in your house, and once the guest has arrived in your house, then you start ordering things and get the material for what the guest is asking for is pull system. But if you are pushing the system even before the guest has arrived, even before the prospect or information of guest has come to you as a host, then it is push system. Now, friends, in pull and push system, in organizational context, which system do you think is more economical, more efficient? Having explained this, that pull system is a system in which the pull system is a process is supposed to be referred as a pull system or process when it is initiated after the customer order is placed. And before the customer order is placed, the process happening is push system. Now, my question to all of you is that which system is more economical in the organizational context? Can I request Ms. Thida, Myanmar? Thida, can I hear from you something? Can unmute yourself and tell me push system is better or pull system is better? Mr. Mohammed, would you like to volunteer, please?
Professor,
Yes.
please can you repeat the question because the sound is disconnected.
Oh. Okay. Let me repeat the question. There are two systems, push systems and pull system. I am pointing this arrow onto the slide.
Yes.
Versus push system.
Yes.
Pull systems are those processes which are initiated after the customer order is placed. Push systems are the processes which are initiated even before the customer order is placed. So my question to you is that pull or push system, which one is more economical in the organizational context? Mohammed,
Pull system.
Pull system. Yes. Why? Good. Very good. Pull system is better. Good.
Because it is initiated with the demand of the client.
Yes.
And the production is
at the demand.
Go on.
Very good. It is initiated at the demand means there will be less inventory. And inventory means what capital to be consumed. Inventory also means space getting utilized or wasted. So pull systems are always preferred, and lean manufacturing systems, we always prefer pull systems. And the operative element or signals that are used to affect the pull system is called Kanbans. We will understand about Kanbans a little more as we go along. But as I said, lean methodology is material flow and information flow. Now, why, suppose, let me just give you a background here, why value stream mapping is required. First of all, what is value stream? As I said, it is basically a flow of material information to be mapped out in the organization or in the office. So improvement events in material information flow, however, create localized effect. If you make one improvement, it will have some local effect. Let's say in a city, if a traffic jam happens in a metropolitan city like Delhi, any capital city is very congested these days. Tokyo is very congested, one of the most congested cities in Japan. Now, I want to decongest the traffic and I want to create a flyover. If I create a flyover on a junction where there is a maximum congestion, chances could be that the traffic jam may not happen in that junction. But what will happen? The traffic there will shift from one place to another place. If you really want to see, learning is, if you really want to see where is the traffic congestion, what is the cause of traffic congestion, you have to go at 30,000 feet level and see from the top as to what exactly is happening. What is interrupting your flow of material, or what is interrupting your flow of information. So the holistic thinking will be possible to affect improvements only when we have created a flow of information and material, and that is called value stream mapping. This is one topic which I'll take for in next 10 minutes. I should be able to. Divya, how much time do I have at my disposal? We did lose some time because of data.
Yeah. So after that, actually, after that only you had till 3, but you can take few more minutes.
Yeah. So I'll take 10 more minutes to explain value stream mapping and sum up for questions and answers.
Sure.
Yeah, thank you. So what is value? Value in simple terms, we always say this, value is what the customer is buying. Or in other words, non-value adding activity is the one which customer does not pay for us. So only those activities which customer pays is treated in the value stream. And the non-value adding activities are identified and systematically removed through the application of various improvement tools. They are called lean tools. And we always go with this terminology of, I'm going with a lean tool kit. Just like a plumber or electrician goes with their kit to fix a problem or a repair, it is a lean manufacturing expert in the operations goes around with a lean tool kit. But first of all, the diagnosis happens with value stream. What is value stream analysis? Current state value stream mapping. You do first of all, how does the flow of information and material happen in the present state? So we call that as current state VSN. And then we give ideas and lean toolkit is applied and future state of value stream mapping is mapped out. So this is the flow: current state, future state, and next future state. 5 simple: specify value, identify value stream for each product family, make the product flow, customer can pull and manage towards perfection. What is flowing? I repeat, the whole idea, there is a lot of misconception about lean manufacturing system, and I'm trying to make sure, friends, though you have very little background of the manufacturing system, this manufacturing system, but my endeavor is that you don't have the kind of misconception that people who are exposed to this lean manufacturing system for a long time have. Even the people who have applied and implemented lean manufacturing systems have the basic misconception as to what is the focus of lean and what is the basic approach of lean. Basic approach of lean is you study the material flow and information. And when we look at material in an office, in a banking and an insurance company, the meaning of these items could be different. In manufacturing, it is materials. In design and development, it is designs. In service, it is external customer needs. Customer is looking for some piece of information or some guidance. That becomes the customer needs in terms of a paper, in terms of an insurance certificate, in terms of a loan dispersed, is the external customer need in the context of service. In admin, internal customer needs are the items. So analysis begins with part of a total value stream here. Value stream mapping, I'll first of all show you, I'm showing you the symbols, but I will just show you one value stream. Otherwise, you will be guessing as to how does a value stream mapping look like. This is the value stream mapping. I will explain this to you after I explain the symbols also. But this is how the whole big picture is. Customer, supplier, production planning, material and information flow. Now it is a complete picture. It is a complete picture of the flow that is required to make a product. Traditionally, you might have heard of terms like flow diagrams or customer drawings. They are completely different from this value stream map. In what sense? Drawing will only give you the design specification of product, dimensions of the product, or functional aspects of the product. Flow diagram will give you the sequence of different processes that are required to make that product. But value stream is showing you the flow of information and flow of material which is required to make that product. So this is where the utility of or the potential of value stream and lean manufacturing systems comes in picture. So I'll go back to the symbols and explain some of them which are very important. Value stream mapping process is a customer supplier. So you first of all say who is your customer. Then you identify processes, different processes through the symbol. If some process is shared by another family of product which you are making, another family of service that you are providing to your customers, then you are shading it. Every process is having data box like cycle time, changeover, batch size, available time. Some important ones, inventory icons. Flow. This is push arrow. Remember what I said is push and pull systems. So push system is this and pull system is this one. Supermarket. There is a concept of supermarket, which means that these supermarkets are there in the production or manufacturing shop floor itself. So that operator knows that we have to start producing because the supermarket is empty now. Nobody has to give any requisition for the material. Information symbols. There is a manual information like a solid arrow, and then there is a wiggle arrow for electronic information. The Kanban systems are applied in two ways, production Kanban and withdrawal Kanban. One is that you have to fill in this. There is a supermarket, you have to fill that supermarket. It is called production Kanban. And if you have to withdraw from the supermarket, it is withdrawal Kanban. All these symbols are working as if a body anatomy, different organs are functioning with their heart rate. Least amount of paperwork happening, visual controls are in place, and everything happens with visual controls and visual signals. Okay, we discussed this. Yeah, general symbols. Like this is when you draw the value stream, we have some opportunities coming our way. Once a big picture is clear, 30,000 feet picture is clear, then it becomes a lot easier for us to identify opportunities of improvement. identify where the traffic is getting held up, where the flow is getting interrupted. So once we are able to understand that, then we identify these opportunities with this Kaizen burst icon. So these symbols are useful, friends, and tech time is one important time, and this becomes a start point for initiating on the value stream mapping. The meaning of tech time is the time which is available to you with respect to a customer wanting one piece of service, one piece of product. Let's say so tech time is effective working time per shift divided by customer requirement per shift. Now I'll give you a small exercise, 1 minute exercise. One shift has got 8 hours, 30 minutes is the lunch time, lunch break. 2000 pieces have to be given to customers. What is the tech time? I'll repeat my question. One shift of 8 hours. One shift for 8 hours, 30 minutes lunch break. Requirement of customer is 2000 pieces. Remember, tech time is calculated with respect to seconds mostly. So can you calculate the tech time quickly? Mamta, can you really work on this quickly? Because I expect this from you. You are in operation, so it will really help you. Mamta, are you there?
Can you tell again? Sorry, doctor, can you tell again, please?
Working time per shift is 8 hours.
Yes.
So 8 hours, how many seconds? 8 hours means how many seconds?
2560.
So 8 hours multiplied by 60 into 60. Am I right?
Yes.
How many seconds in 8 hours?
It's 25 seconds.
8 into 60 into 60. 28,800 seconds.
Yeah.
And I said lunch break is 30 minutes. 30 means 60 multiplied by 60 becomes 1800 seconds. So I have to subtract this from the effective working time. So this gives me 28,800 minus 1,800, which is 2,700 seconds. So effective working time per shift is 2,700 seconds. And I told you that 2000 pieces is the requirement. So what is the tech time now? What is the tech time now? 27,000 divided by 2000 pieces will give you 13.5 seconds. So 13.5 seconds becomes the tech time. A piece, this becomes your heart rate. This becomes the heart rate of the production systems. That customer is wanting one piece every 13.5 seconds. Your heart beats, every minute your heart beats 72 times. Customer is wanting one piece every 13.5 seconds. This is how the entire system, human system, the way human system is operating, the manufacturing systems and operative systems operates. So there are some examples of current state as I showed to you. That here,
Dr. Sandeep, sorry,
Yes.
I'll have to hard break it over here because then, there would be very little time left for the other codes.
just give me 3 minutes, 180 seconds. I'll
Sure.
close it. Okay.
Professor,
Yes.
please, can you repeat again the calculation of that time?
Well,
I'm not able to hear you.
no, I can hear him. Mohammed is saying repetition of tech time. Tech time is effective working
The
time
question-
per shifts,
Per shift, yes.
which means 8 hours multiplied by 60 minutes multiplied by 60 seconds. That
Yes,
gives
yes, it's clear, it's clear. This
Clear?
is clear. Yeah, and at the after customer requirement by shift.
Okay, customer requirement is 2,000 pieces, one shift. So that means
2,000 pieces. Okay.
yes,
For
2,000
example, 2,000 cars.
yes, 2,000 pieces. So that makes it 27,000 divided by 2,000. 27,000 is the numerator and 2,000 will come in the denominator. That will give you 13.5 seconds, which means that every 13.5 seconds, a customer is looking for one piece. It is something like this, that your human body requires 72 times of heartbeats for you to function properly. So this is the way the manufacturing systems are also designed through value stream mapping. So we draw the current value stream, then we do future state, and we keep on repeating this. This is one example of service in the software specific cell. We make the current value stream and we do the future state. This is the way step-by-step approach is applied, and the continual improvement of cost and efficiency, in other words, is affected with this methodology of lean manufacturing systems. Draw the current state, draw the future state, identify the new waste, and keep on repeating this cycle to the next future state. So we have waste, less waste, less waste, and continual improvement journey continues. So this is the way everything goes in a systematic manner. Any questions now? I'm sorry because of the interruption, but lean manufacturing system is a new animal for some of us. So I must say that if you have got to understand some flavor of how the manufacturing system is employing these principles, will also be a good achievement. Any questions in this regard, please?
Professor.
Yes.
Which methodology, other methodology is concurrent of lean manufacturing system?
Just a minute. Pause share. Let me just stop share so that I can look at your face. No. Yes. I'm sorry. You asked something. I just
to know. Japanese found this lean manufacturing system, and USA use this manufacturing system, or there is another?
Yes, I think you have asked a very good question. Japanese manufacturing system is in sharp contrast to US manufacturing systems. And Japanese manufacturing systems goes on to identify every bit of improvement opportunities, be it in the information, be it in the material flow. By and by, little by little, those Kaizen driven approach is applied by Japanese manufacturing systems to an extent that Japanese cars became a big threat to American car manufacturers, General Motors, Ford, and Chrysler. And what is called lean manufacturing systems by Americans is actually a Toyota production systems in Japan. So lean manufacturing systems and Toyota production systems are similar in approach and exactly same. But as trainer and a consultant, sometimes when I'm talking to a Japanese, I will not use lean manufacturing system as a term. I'll be using Toyota production systems. If I'm talking to an American company, I will be using this term called Toyota production, the lean manufacturing system and production system. Okay, thank you very much and namaskar. It was joy working and talking and participating with you. We'll see you tomorrow also. I have another lecture lined up for problem solving process tomorrow. Over to Dr. Sonia Jaiswal. Thank you very much.
Thank you, Dr. Sandeep. But before you leave, I would request you to introduce your our co-facilitator for the day. because I think you know him much better than what we do. So it would be good if
Dr. Sumit Jaiswal does not need introduction in MET actually, but yes, for the benefit of participants, he is expert in the operational sciences, and he is actually he'll take you through the session of Dr. Jaiswal. I think it is
Data analytics.
you know what me and Dr. Jaiswal are working in tandem to give you inputs of, as I said, that we are going from drawing room to kitchen. So we are moving from the hardcore marketing or general marketing area or general management area to the operational areas. So we have actually gone into those areas which are nitty-gritty of operations. Over to Dr. Sumit, please.
Thank you so much, sir. And I was listening to you also, and your session was very enriching. And now you have actually given me a challenge that how I should create interest in the audience in my session. Well, let me share my PPT and okay, is the PPT visible?
Yes.
Right, and it is in the screen show
is.
mode.
Yes, yes. It is in the full screen mode.
Right, sir. And am I audible to the fullest here?
Yes.
Yes.
Thank you. Okay, so the session which I will be taking, it's more about data analytics. And when we talk about data analytics, there are so many aspects of it, starting from descriptive, then diagnostic, then predictive, and prescriptive, so on. So the aspect which I'm going to touch today, it's more about descriptive data analytics. Because the very first thing that happens is data, and there are a lot of data available in the organizations, and you all must be handling so much of data. Now, what to do with that data, that always is a question in front of the persons or the employees who are handling data. Now, how to handle data, that's what we will begin with. And descriptive is the very first technique. So what we are going to cover today, it's going to be like the types of statistical methods, descriptive and inferential, I brief you on. Then basic statistical concepts, population and sample, because most of the time it's very difficult to enumerate the large populations, and we rely more on the data samples. Various classifications of variable, because to collect data, we need to have sound understanding of the variables. Using them only we can collect data. Then what type of scales are to be used for measurement of data. And finally, using MS Excel, how the descriptive techniques they can be deployed. So that's going to be the content of today's session of mine. And learning outcome, of course, are based on what I'm going to cover. So you all will be able to understand importance of data. You will be able to understand the concept of population and sample. We'll understand the various classifications of variable, various scales used, and you will be finally able to understand various descriptive techniques using MS Excel. So that's going to be the outcome of today's session. Now, when we talk about this statistic, you can read also that it has been derived from the Latin word status, or the Italian word statistica, or the German word statistic. Each means political state. So statistics, it has emerged from political state. Okay, but how we have to understand statistic? Because now statistics have entered into each and every aspect of different spheres. You talk about agriculture, it is there. You talk about businesses, it is there. You talk about biotechnologies, it is there. So it is in every sphere of life. Now, if I ask the participants that how you understand or how you will define statistics, that will help me in knowing how much we are aware about this particular topic, statistics. Anybody? Okay, so I may then pinpoint Mr. Andre in case he's here.
So basically related to the data which is classified, and then after, going to interpret those data.
Absolutely. So when you talk about statistics, it deals with four main things. First is collection of it. Second is presentation of it, which could be in the tabular format, which could be in descriptive format, it could be in any format. So presentation is second, and third is we analyze the data, and fourthly, we interpret based on those analysis and take some conclusions, make some conclusions. So that's how we define this particular statistics. And broadly, it is of two types. One is the descriptive, wherein descriptions of the data they are given, understandings of the data are given. And second is inferential, where based on the sample informations, we have to take or draw inferences about the populations. Okay, so population, and we are not able to study them completely. So inferential is what comes there. I have a session on that also, but that's tomorrow. Today, the focus will be on this descriptive. Okay, so when you distinguish these two, well, there are a lot of obvious differences. Like descriptive, it will be used to organize and summarize the data to draw meaningful interpretations. It will be dealing with enumeration of organizations and graphical representations of the data. It can be like condensing of data, like mean, mode, median type of tools can be used to condense the data. Then assess the variability, that how much is the dispersion, how much is the spread available in the data. Because when you go into the organization, they want much consistency in the production lines. Okay, so variability has to be minimized. Your concepts like Six Sigma and others, they are actually based on controlling of variability. Variability is a very, very huge topic in itself, but yes, it is a part of a description. Then measures of relationship, wherein we can talk about that how much is the relation between two variables or between three variables or more than that. Okay, those type of things, they are covered in descriptive. But when you talk about inferential, I have told you it's more about making inferences or concluding about the population from where we have taken the data. Now, every time I'm using a term data, 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 let's understand how we reach on to this data, why we actually need this data. We have to understand that aspect now. See, the things will start from some sort of issue, some sort of challenge. Now, issue or challenge, it can be a negative aspect at a time, it could be a positive aspect most of the time. Okay, so it could be any aspect. For example, if you want to improve, let's say, the quality standards of your organization, that's a challenge in front of you. Now, how you will improve the quality standards of your organization? For that, you need to understand the existing levels of quality in your organization. I hope I'm making sense here. See, how we have to have data, for that there is a proper process. So some sort of challenge we must be handling. Now, whenever there is a challenge, then some sort of objectives are to be defined for that particular challenge. For example, the same example which I was giving you, that you want to improve quality standards of your organization, then one of your objective will be to understand the parameters or factors which are critical for quality. Because until or unless you have the knowledge about critical factors of quality, you can't improve quality. Second objective will be to understand the existing level of those parameters in the organization. Because even if you are improving quality, even quality has to be quantified, and the current level of that particular quality, it must be understood. Only then we can make improvements. And third is to propose suggestions for improvement. Therefore, what will happen for first thing will be some issue or challenge. Then based on that, you will have some objectives formulated, right? And then we will have to have understanding about from where to get data. So some sort of population will get attached to it. Then some variables will be understood. then some scales will be deployed in the variables, and then the data will be collected. Now, issue objectives, challenge objectives, they are purely the discretion of manager, investigator, or whosoever is handling that particular issue. So that will be there, but that's purely a different thing, discretion. Okay. Now, after that, what comes? That is what we have to understand as a part of statistics. So starting from population to data, now let me give you insights. Now, if I ask you people, how you define population or what you understand by population in terms of statistics? Anybody? See, why I'm asking this question is because population is not confined to living beings only. Okay, it is related to the objects also. It is related to products also. It is related to service also. It is related to finance numbers also. Okay, so population, it is not confined only to the living beings. So population, it is basically the complete set of individuals, if those are under consideration or those we want to study, or the objects or the numbers which are of our interest. So that is how populations are understood and defined. Now, what will happen? Either we are able to study the complete populations or we are not able to study the complete population. There are constraints most of the time. Now, constraints could be in terms of money. We don't have that much money that we study all the objects or all the individuals. There must be constraints of, let's say, manpower. We don't have that much resource or manpower available which can do a complete study. Or it might be that the population units are not fixed. They keep on moving from one place to other place. It might happen that the nature of the product or the object that we want to investigate or study, it is destructive in nature. For example, arms and ammunition kind of things. So if you start testing all the units that have been made or manufactured, so everything will go in testing only and nothing will be available to us. Okay, so sometimes disrupt. Hence, what we work majorly on is sample. And sample is a finite subset of population. And it has to be selected in such a way that it gives us a true picture of the population. And ultimately, the inferences which will be drawn for the population based on that sample, they should be error-free, unbiased, and acceptable to the public in general. So this is how we understand the population and sample. Now, if we move further, you can see here, next is variable. We now have identified that where to study. Okay, so population, it is known to us. If we are not able to study complete population, we know we will be studying the variable, the sample. But how to study it? What to study? We need to have understanding about variable. Now, variable name itself is indicating it is something which will vary. Okay, but how? Let's understand it technically. Okay, what are the things that vary? It is the property, it is the characteristic, those vary. Okay, so how we define variable? Variable is basically a property or characteristic of the individual or of the object or of the numbers that can take different values at different times depending on the situation. For example, when you are on Earth, your weight might be X kg. But if you go on Moon, now the situation has changed. Your weight might not be exactly X kg because of different scenario. So variable, weight becomes a variable. It keeps on changing. Okay. Now, once we have understood variable, then comes the different classifications of the variable, because without understanding these classifications, it becomes very difficult to apply the appropriate tool or technique during analysis. So when we talk about the various classification, there are three main classifications of the variable, starting with discrete versus continuous, qualitative versus quantitative, independent versus dependent. I'll explain the first two. Third one I want to discuss with you all, because third one is something which most of the businesses they have to use. Okay. Now, discrete and continuous, it is something like discrete variable is a variable which will take isolated values. Okay, so it will be needed like when you're studying the number of customers visiting an outlet, retail outlet. So number of customers will always be 1, 2, 3, 4, 5, 6. It will never be 1.1. How many times you have called your better half, that will always be either 1 time, 2 times, 3 times in a day, but it will not be like 3.5 times. Okay, discrete, isolated values on. How many babies are born in a hospital during a day? It will always be 1, 2, 3, 4, some number, but it will never be 3.5 babies born. Okay, so discrete. Now, based on discrete, we have discrete probability distributions, and accordingly, one or the other probability distribution is deployed in different scenarios. So that is one we have to understand, discrete. Second, continuous. Continuous basically means those variables which can take all possible values in an given interval. Okay, now when you talk about your salaries, or you talk about heights, weights, so what we have is we have the subunits also. Decimals will automatically come in. Okay, so that way you can understand continuous. All right, and then a continuous can take all possible values. So based on that characteristic, there are some probability distributions available which can be used. Most commonly used probability distribution is normal distribution, and most of your advanced analysis, they depends on normality concepts. Is the normality existing in the data? Is the data normally distributed? I'll come on to those things also. But first thing, discrete versus continuous. When you move forward, next classification is qualitative versus quantitative. Now, as the name itself is indicating, those variables which handles the qualitative aspects of the individuals or of the objects, those are qualitative variables. And those variables which handles the quantitative aspect of the variable, we call them quantitative variables. For example, when we talk about you being participants, your satisfaction level from this particular course, that is a qualitative thing, satisfaction. Highly satisfied, somewhat satisfied, those type of options will be given to you people. So qualitative aspect. But when you talk about quantitative on a 100-point scale, or if we conduct an exam for you people after the completing of this course, then what is the score or what are the marks that you have attained out of 100? That's a qualitative aspect. Now, let's move on to the third, which is most important. And that is what we have to understand, that what exactly are independent variables. See, one common line quite often we hear from others, that independent variables are those which are independent of others. Now, besides that, because even a 6th standard kid can also give us that particular definition. Okay, my point is how we understand this independent variable, because most of your practicals, most of your experiments, they actually require knowledge about independent variables. Now, anybody? Mr. Victor, would you like to speak on this independent variable? Your understanding on independent variable?
Let me think first, Doctor.
Anybody else? See, I tell you. See, that's what I wanted, because without understanding, sound understanding of what is independent variable actually, we can't use them in the practice. Independent variables are those which are systematically manipulated by the investigator. Let's understand what is systematically manipulated by the investigator means. Okay. Now, let's say you are the boss and you have 10 employees working under you. You want to improve their efficiency. Are we clear? You want to improve their efficiency. Now, how you will improve their efficiency? What's in your hand? With what you will play? What things you will manipulate? That is independent. So you will devise a training program that is in your hand. And you will try to give them training A, training B, maybe some other training. Okay, that is in your hand. So what you are doing is independent. And the result of those manipulations is actually measured on dependent variable. I'm sure most of us make timetables for ourselves. That early morning 6 a.m. we will wake up, then we'll do a lot of study. We will do then XYZ events after time 9 a.m. then 10 a.m. But how many of us religiously followed that? Very few. Okay, so meaning thereby making of timetable was independent, but following that, see, quite often we also make the statement that had it been that I have followed that particular timetable which I made when I was a student, results would have been a little different also. So things that were in my hand, I actually could not manipulate them properly. So those were independent things. A result was dependent on. Let's say a company wants to improve its profits. Now, profit depends on some factors. You can play with those factors. You can't catch hold of that profit and say, profit, now you have to increase. You can't do that. Profit is outcome of some other inputs. And wherever you are putting in some efforts, that is where we say independent. And dependent is outcome of it, a responsibility. All right. Now, next very important thing that we have to understand is scales of measurement, because without just having understanding of variable will not suffice the purpose. We also need to have understanding how to measure them. Now, when you talk about the scales of measurement, basically we have 4 scales of measurement. And what are these? Nominal, ordinal, interval, and ratio. I'll give you insights about them. See, nominal scale is when only categorizations can be done. Please understand, nominal scale is which has only categories, but there is no order in the categories. For example, if I start asking, let's say, see, please take all the examples as examples only. Okay, let's say if I start asking which religion you belong to. Let's say out of 19 candidates that are there in this batch, 10 says that I belong to religion A. Okay, 10 says I belong to religion A, 10. 5 says belongs to religion B, and remaining 4 says belongs to religion C. Now, if you see here, religion A, there are more people. But can you say religion A is the best religion? You can't say that. Please understand. Nominal scale has only categories. So you can put a particular person into one or the other category. But based on those categories, you just can't say that this category is better than the other category. Let's take another prominent example. If I start asking that, what's your gender? It may happen that those who are males will say male and those who are females will say female. So it may happen that there are 15 females and 4 males. So number of females is more, but that will not conclude that females are better than male. It's just that in this particular batch, females are more in comparison to males. So only categorization is possible. That is what nominal scale is. Move further, and we have the ordinal scale. Ordinal scale is when we have the categories also, and there is order in the categories. Most of the times you must have seen a scale like highly satisfied, satisfied, somewhat satisfied. I hope I'm making sense here. Or you can say a scale like excellent, very good, good, and so on. Average, poor, something like that. So what is happening in that scale is there is categorization also, and there is order also. We all know excellent is better than, very good is better than good. So there is an order. Okay. Most often we say I belong to middle class family. Okay. But from where that middle class starts, that we don't know. So ordinal scale has category, order, but numeric distance between the orders is not known to us. Okay. Comes the interval scale, and interval scale has more properties than the previous two. And this scale has got order also, it has got categories also, it has got numeric distance between the categories also, but the absolute zero is not available in the interval scale. You must understand this absolute. See, interval scale is used for comparisons. That how much is the improvement in me in comparison to last year. So now things will start from where I was last year. So it will not start from zero. It will start from where I was last year. So last year's score becomes my zero. So that is what we call arbitrary zero. That's how interval scale is defined. And then finally we come on to the complete scale, and we call it a ratio scale. It has all the properties of previous scales along with absolute zero. So when I say marks, when I say satisfaction level, when I say your height, weight, or your salaries, or profits of the organization, or number of participants attending this session, that will always start from the zero, true zero. Okay, so this is how we understand the different types of scales. And once we use these scales with the variable, what ultimately we get is data. Let me take you back to that slide. I'm sure how we reach on to data, it's now a bit clear. Okay, population, variable, scale, and ultimately data, right? And data always have some sources, and we call them quite often primary sources of data, secondary sources of data, etc. But now, how to describe that data? That is what we have to understand. To describe data, we have the tabular and graphical representations. When your data is qualitative in nature, you can use the tabular method, you can use the graphical methods, which includes the bar charts, pie chart, frequency distributions in the tabular format, relative frequency distribution, etc. If your data is quantitative in nature, again, the tabular methods are there, graphical methods are there, but they changes. Okay, whatever is applicable on qualitative is also applicable on quantitative data. So these bar diagram, pie chart, they can be used for qualitative also. But if your data is qualitative, it becomes very difficult to use the other way around. Now let's move on to some practical examples and see how to describe data, because today's session is more about the description of data. So after we have understood that how to collect data, let's understand how to describe data. Now let's say guests staying in Hilton, they were asked to rate the quality of their accommodation as being excellent, above average, average, below average, or poor. And there were 20 guests whose responses were taken. And here are the responses. Now, if I give this particular thing to my boss, will he be able to make any interpretation out of it? It's very difficult. Raw data, whenever is large in number, it will not give us any fruitful result until or unless it is presented in a proper way. I hope I'm making sense here. Raw data, like first respondent said, or first guest said below average, second said average, next said above average, and so on. Now, this data in this particular format, it will not fetch any fruitful result. So what we do, we try to classify the frequencies. Okay, that how many people said below average, how many people said poor, how many said average, and so on. That is what will give us fruitful result. And if you see here, it has been described. So how many people have said poor, how many have said below average? Now, based on this, the Hotel Hilton now can work on that. Oh, why two people have said poor? What was the flaw? Diagnostic study. This was description that two people said poor. Oh, why they said poor? Comes your next level. Okay, so right now we are on to description of data only. So we'll focus on that. So description of data, this is how you describe the qualitative data, frequencies you can make, and you will agree here that bar diagrams or the graphical representations or the diagrammatic representations, they are very catchy. Why they are used? Most of the organization, if you go there, you will always find some sort of bar diagram, pie charts. They are being displayed on the notice boards because diagrams are very catchy and they can give us a lot of insight in very lesser time. Okay, so those type of techniques can also be used to describe data. Now let's work on the first one, the bar graph. And the bar graph, you will agree, on X and Y axis, those type of axes are to be firstly drawn, and then on X axis you will take the scale, okay, like poor, average, above average, those type of ratings, and then frequencies will be taken on the Y axis, and that way you can always have the bar graphs generated. All right, like if I make a bar graph here, I'm sure it must be visible. See, here you can have on the y-axis, you can have the frequencies. On the x-axis, you will have the variable. Okay, so starting from excellent, above average, average, then poor, that way. So how many people said excellent? It was only one. Okay, so you will have frequencies defined on the y-axis. I'm sure there is a clarity here. In case you have any confusion, please do ask. Bar graph, that's the simplest thing to be worked on for the description of data. And why bar graphs are used, I have told you. It is used because diagrams are very catchy. Looking on to the diagram, we can have better idea about the data. That's the point. Moving further, like for this data only, this was the bar diagram that we have. So you can see here on the left side, we have the frequencies, y-axis, and then the categories on the x-axis. And accordingly, this is now better. It is very clear that above average was spoken by 9 people, excellent was 1, and so on. All right, so description of data. Then pie chart is yet another way of describing the data, right? And pie charts, they are the circular thing, and how much pie we have to give into a particular category, that is what we work on. So complete circle has 360 degrees complete angle. How much angle has to be given to a particular category? That depends on how many people are actually favoring that particular category. So some sort of calculations, and ultimately this is how the pie chart will look like. I think they were very simple things, and most of us were familiar also. Anybody? Mr. Paul? Miss Mamta?
Yes, sir, we can. Sir.
All right.
Yes, Professor.
Yeah, I was saying, any confusions on this pie chart or bar diagram?
No. It's going.
All right. Now let's move on to when we have quantitative data, how we handle it. Okay, how we describe it. See, idea in descriptive techniques is that larger data, which is raw data, how we are able to tell to others that this is the data with some techniques like bar diagram, pie chart, mean, median, mode, etc. Okay, that is the whole idea in descriptive techniques. Now let's say that there is a manager of Shane Auto would like to have a better understanding of the cost of parts used in the engine tune-ups performed in the shop. He examines 50 customer invoices for tune-ups, and those 50 values, they are here. Now again, when you have this raw data given to somebody, they will not be able to fetch any fruitful information out of it. So how to present it? One way is we can have class intervals defined, and then that will give us better picture. Right now, I'm sure nobody can extract any good output out of this particular raw data. But if I convert this raw data into grouped frequency, okay, which can be between 5 to 20 classes can be there. Okay, and then the class interval depending on what is the largest value, what is the smallest value in the data, etc. Based on that, we can always have the class interval defined, and this is how it could be. Like now the data was having a range somewhere around 40. So accordingly, we can have 10 as the width of the class. Highest value was 109 in the data, lowest was 52, and 6 class intervals we are looking for. Okay, so 9.5 is the value, so 10 we can take as the width. And ultimately, if you see here, this is how the description of data is there. Now this is giving us a better picture that how many customer invoices they were between 50 to 59 rupees. There were 2. How many were between 60 to 69? There are 13, and so on. So this is better description of the data than what you had in the raw format. Look at this raw data. This is not giving us any fruitful information. Okay, so description using a better technique will always describe data better, and result taking or the decision taking, it increases. The capability of decision taking, it increases. Yes, Ms. Mamta.
Yeah, is there any logic behind divide by 6?
Okay, see, 6 is the number of classes you have decided.
Oh,
right? If you see here, 6 class intervals we have.
yeah.
Okay, how many classes you want? That is what in the denominator we take. All right. Any other question? All right, let's move forward. Now comes the main thing, and that is describing the data with few numbers. Most of the time, you must have heard that average marks of this class are 78%. I'm sure that type of statements we must have heard. Now, there are 100 students in the class, but only one value is able to give us idea about the complete class. When I say average marks of the class are 78%, I'm actually talking about the central tendency of the data. It is the central value around which all other values are clustering. And this central value, it is enabling me to comment or to understand the complete data. You see here, description of data, but only with one value. That's the power of central tendency property of the data. Every data has a tendency in it. Okay, every data will have a tendency. For example, again, this is just example, and we should take it as example only. If you go to Europe or US, you will find the heights there are usually 6 feet and close to that. Okay, but if we go to Japan, on the average, the tendency of heights, it will cluster around 5'8" or 5'7", something like that. So there is a different tendency. So every scenario and then data collected on that scenario will always have a tendency to cluster around a particular value. I tell you, a very simple example I give you. Let's say there is a class, there is a teacher teaching to the class. Okay, and teacher conducted 30 sessions. Now in the 30 sessions, there were some students who were very, very naughty in the class. Now, the teacher became strict with them. He shouted also. He asked them to move out of the class also in some of the classes. Now, those students, they made a mentality that this teacher is not a good teacher. And there were some students who were very responsive in the class, and this teacher always used good words for them. And let's say he says, excellent, very good. You are one of the brilliant students. Now, those students will have a different tendency or a mindset towards that particular teacher. Now, feedback was taken from those students. Feedback was taken about that faculty. Now, what will happen in the feedback? Those students who were sent out of the class, definitely they will say, poor faculty, not so good faculty, doesn't know how to talk with elders. Now we are postgraduate students, something like that. But those who are very responsive in the class, they will say, oh, faculty, such a nice faculty, always encourages us. But you see here, there will be 5 students who are sent out of the class, 5 students highly responsive and are giving those type of appreciations to the faculty. But the remaining 90% of the student give you exact picture, and their data, their response will actually be giving or revolving around this particular central value. That will give you the complete idea about how the teacher is. Central tendency is that powerful a thing. Okay, so every data has that tendency. So how to measure that particular central value, that is always a question, and answer to that is arithmetic mean, median, and mode. These are used to describe the data. Now, what is arithmetic mean? I'll not get into that because we all understand it is sum total of all the observation divided by the total number of observation. I'll show you with one example, and this example is about efficiency apartments, and what is the rent of those 70 efficiency apartments that is given in this particular data. And now looking on to this particular data, again, it's very difficult to have description done. So another way of describing the data is the central tendency. So we'll take that particular value, and sample mean can be computed, and 490.80 is the mean. And this mean is indicating that some of the flats will be little costly to this 490, and some of the flats will be less costly than this particular value. Okay, so center talks about the center. Some are left, some are right to it. That is the power of central tendency. But let me take you to a scenario. Okay, just give me a second. If I could have that Word file. Okay. Okay, ignore it. Let me write the things here, and do let me know, are the things visible to you? Is it visible what I have written?
Yeah.
It's visible, right?
Yeah.
Okay, now let's say that you did a survey, and survey was about the agreement towards a particular scenario or towards particular product, that this product is better than the other products of its category. Now you went to, let's say, 50 or 70 respondents, and options you gave were strongly agree to the statement, yes, this product is better, agree to the statement, somewhat agree, so neutral type of statements, disagree to the statement, and strongly disagree to the statement. These were the options given. Now, out of, let's say, 70, 10 people said strongly agree, 15 said agree, 15 were neutral type, 15 were on the disagree, and remaining, now this is 45, 55, remaining 15 said disagree. Are we clear with the data? There is a scenario, and scenario was the product of our company is better than the competitor's product. And you went to the customers, and now you have generated the response from the customers. 10 people, they are saying strongly agree to the statement that yes, your product is better, agree 15, and so on. Are we clear with the data? Because if we are clear with the data, only then my question will have some meaning for you. Otherwise, there is no meaning of that question. So question is not clear.
Yeah, in which perspective you are telling that data is whether clear or not? That's I'm getting confused. That's otherwise.
Okay, what I'm trying to highlight is that if I ask you to find mean of this data, can you find the mean of this data? Point I'm trying
it's a frequency, no? 10 is a frequency, 15 is a frequency.
Absolutely.
Yeah, so I think it's not clear data. If you wants to get the mean, that means there should be. I'm getting confused. It's long back.
Okay. See, the point I want to highlight here is that arithmetic mean also have some disadvantages. It can't be computed on the qualitative data.
Yeah, okay. Yes.
So when you have qualitative data, because strongly agree, neutral, these are qualitative
Qualitative data, yeah.
things, responses. Okay. So mean can't be computed. Hence, in certain scenarios, mean fails, and what we have to use is median. Median will give you the central value, and using that central value, you can actually comment on the data or the center of the data.
Yes.
That was the point I wanted to highlight. Now, whatever is applicable on qualitative data is automatically applicable on quantitative data. So median is applicable on quantitative data also, and it is the central value which divides the data into two equal parts, and so on. Okay, so if the number of observations are odd or even, that way we can always have the median found. So it is always arranging the data in ascending order first, and then the center is to be located. So center becomes your median. So if your data is qualitative, this procedure is preferred. So for ordinal type of data, we use median as a measure in comparison to arithmetic mean. Now let me again take you to a different scenario. Okay, odd even, that I would not, because I'll take you to MS Excel, that how we find all these things there. Now, let me take you to another scenario. Let's say there is a retailer. Okay, and he's selling shoes to the individual. Shoes of, let's say, only to male people, male gender. He's selling the shoes. Now he's selling, let's say, shoe size 7, shoe size 8, 9, 10. Number of units sold in a month of size 7 are 40, of size 8 are 35, of 9 it is, let's say, 25, and 10, only 10 units are sold. Now, Ms. Mamta, can you comment on that which measure is most apt for this retailer? I'm asking very basic questions.
Yeah.
Because it is more about describing the data and using appropriate measures to describe the data. What happens is, when you go to organizations or when you go to retailers like this, what will happen is they can't find the arithmetic mean. Because if arithmetic mean, let's say, comes out to be 8.5, so will that retailer say, send me all the shoes of size 8.5 because that is the arithmetic mean coming?
Yeah. That's the reason.
Can't do that.
Yeah.
Okay. Will he go for median? That median is coming 8.3, let's say. So make all shoes of size 8.3 and that's what I want to sell. He will not do that.
So we will go for the more, no? The repeated one.
Absolutely. So he will go as per frequency, as per occurrence of frequency of a particular shoe size. So if he say that 40 is the most sold, 7 number is most sold unit with 40 as its frequency, he has to ensure 7 number more.
Yeah.
Because more customers are coming who want number 7. Then he has to prioritize number 8, then number 9, and then number 10. So this is how the nominal data is classified, because shoe size number is nominal in nature. All right. Now, just having knowledge of central tendency will not suffice the purpose. What we need to also understand, it is, I'll now quickly shorten the things because I know time is running out. Dispersion. How much is the spread in the data? Because mean alone cannot give us the complete idea about the data. I'll write a few numbers and you will understand it. Let's say I have 3 data sets. The first data set is having 4 numbers, which are these. Second data set have 4 numbers, which are 5, 5, 5, and 5. And third data set is 7, 3, 3, 7. Now, if I ask you what is the mean of first data set, second data set, and third data set, you will simply compute the mean, add all the 4 values, divide with 4. 5 is the mean here, 5 is the mean here, 5 is the mean here. So all the 3 data sets have same mean. See, when we started with arithmetic mean central tendency, what I said was that one value can give us complete idea about the data. 78% is the average marks of the batch. But one value alone will not give you the correct idea every time. If you look at these 3 data sets, they have a lot of dispersion among themselves. Now, second one is the most consistent. First one is the most heterogeneous data. All right. So along with central tendency, dispersion is yet another measure that should be taken care while describing the data. It talks about the spread in the data. How much is the spread? Now let's move on to the MS Excel and how we perform all this on MS Excel. That will take very less time and we will be able to complete the things fast. Okay, just give me a hint, ma'am, that is my MS Excel visible?
No, still it's a PPT.
Still it's a PPT, so I need to share.
So you should close it, then share.
Great. Now I think it is visible, right?
Yeah.
Okay. Now the data which I have written in this particular MS Excel, it is about that efficiency apartment rents only. Okay. Now how to describe this particular data using the central tendency, dispersion, etc. How we work on it? It's very simple. We have some commands available on MS Excel. If you look at the top, there will be option of data. You need to click this. And once you click this, you will reach on to a particular option of data analysis. You just click on it and a new window will appear. Is that window visible?
Yeah.
Small window, yeah.
Yes.
Small window will have a lot of statistical commands and we have to click on descriptive statistics. Click on OK. It will ask for now input range, and input range will be your complete data which you have in the MS Excel. So 70 efficiency apartment data we have. Now I will feed this data in that particular input range. Clear? Thereafter, let's have the output in the same sheet. So you need to define the cell where you need to have it. So E1 of Excel, I'm defining E1, first cell. Okay. And then you need to click here, the summary statistics. Summary is more about description of data. Okay. So once you do that, then you click on OK and results will come like this. So with one click of button, you have all the statistic available for describing the data. You see here, some of the topics I have yet not touched in. Mean, standard error, median, mode, everything, all the descriptions, they are available. Okay, so this is how we describe data.
Professor, Professor,
Yes, please.
which function of Excel you have used? The function.
I'm not able to understand. You're saying which version of MS Excel?
Yes, which function?
Which function of MS Excel? All right. Okay, let me take you to the journey also, that how to install this data analysis pack.
Yes, yes, I know.
What you need to do is you will click on file. Once you click on file, a lot of commands will appear. You have to go to this options. Click options. A window will appear like this. In that window, second last command is add-ins. You need to click this. Right. Then once you click add-ins, analysis tool pack, it's available on the top.
Okay.
You need to click this and then click OK. Data analysis pack gets installed.
Good.
All right.
And after,
So,
in this package, which function you have
now, on the top, you can see home, insert, page
used?
layout,
Yes, that's
formulas,
data.
and then data.
Yes.
So data is what you have to click. I'll take you
Good.
to that. Let's say you are on
Yes,
home.
yes.
This is the scenario. So what you will do now, you will go here on data,
Yes.
click it.
Yes. Yes.
Okay. Then you will
Okay,
reach
okay.
on to this data analysis thing. Then you have to click this and a window will appear asking for what you want to apply.
Descriptive statistics. Okay.
Right. So descriptive
tools.
statistics you need to click, and then
analysis
you
tool.
have to feed the data, and accordingly you have to give commands, and most of the descriptive things, they will appear.
Okay.
Now, in case you want to use bar diagram, pie chart, etc., then again, we have commands available. Let's say this is your data: highly satisfied, satisfied, neutral, dissatisfied, highly dissatisfied. 15 people said first one, 27 next one. So you want to have a bar diagram or pie chart. What you will do, you will go to insert, third one, then you go to this charts and click here. Okay, let me first select the data. Now click on all charts and you have the pie chart here, bar diagram here, histogram available. Okay, so these type of charts, they can easily be worked on. So how many said highly satisfied? 15 satisfied. somewhere around 26 or 25, and so on. So this is how the diagrammatic techniques can be worked on for description of data. Tomorrow, again, I have sessions with you. And in those sessions, I'll take you through the predictive analytics and inferential analytics, because this was very basic. This was the initial thing where we need to understand what are the different types of variable, how to collect data, what are the scales to be used, etc., and how to describe the collected data. But in tomorrow's session, we'll talk more about how to predict based on the past data, how to predict the dependent variables. Then in the inferential session, I'll talk more about how to draw inferences about the population when you're working on samples, etc. So I stop here. Your questions are most welcome.
Thank you, Dr. Smith.
Thank you, Divya.
Thank you for your session. I know you had to stretch a little late, but today has been a little challenging network-wise to us.
True.
But I can see all of them engaged even after a time.
Absolutely.
Great.
Audience are so participative that it encourages the instructor also.
Okay.
Thank you.
Wow. Great. Okay. So we see you tomorrow again. And participants, I think you must be tired as well. Take a good break before you start with other end of your life.
Yeah, thank you, Professor. Thank you, Divya.
Have a nice
Thank you, everybody. Thank you so much.
Thank you, Professor. Thank you.
Thank you.
Thank you,
Thank you,
Divya, also.
Professor.
Thank you so much. Namaskar.
Mohammed, Divya, bye-bye.
Bye-bye.
Thank you, Victor.
Bye, Victor.
Okay, see you tomorrow. See you
Yep, see you
tomorrow.
tomorrow.
Absolutely. Tomorrow we'll interact
Okay.
again. Thank
A
you.
great MBA course.
No, it's a wonderful, that summarizing all of the topics.
Wonderful,
I was
Mamata.
really imagining that,
Yeah.
Absolutely.
After this course, if we follow everything, we will become chief executive officer of startups.
I tell you. See, when we teach about quality, what we say that if we can do small things correctly, quality automatically comes in. Quality doesn't require any rocket science.
Yeah.
It's doing small things correctly only. So
Yes.
we know about these things, and if we can use them appropriately, then definitely results are going to be quite favorable for everybody.
Okay. Thank you, Professor. Okay.
Thank you.
Great experience. Clear.
Same here. Nice interacting with you all.
Thank you. Okay. Thank you.
I'll be sharing the feedback link shortly. Do sharing of feedback for
Divya, no,
Have a nice day.